2% is and will remain our inflation target.
It's critically important that inflation expectations remain anchored at 2%.
If the right inflation target is 2% and they want to get there in a credible period of time, then we are not sufficiently restrictive.
We have to get inflation down to 2%. We all agree on that. We're all committed to that. The question is how to get there.
If we are stabilized around 2.5% and the economy is humming along, are you really going to break it?
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Let's get back to work. Live from New York City this morning. Good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Tom Keene. I'm Jonathan Ferro, together this morning with Katie Lyons. Your equity market on the S&P 500, slightly positive by 0.15%. TK leaving Jackson Hole behind. We'll talk about that in just a moment. And pushing ahead to payrolls Friday. Do you want the number? A sneak peek. 168.
I saw
Could
that.
be the lowest number, TK,
that.
going back to the start of 2021.
A lot of hope and prayer here, and what's important here is in a sleepy week in August, it's not. There is a lot going on this week, not only the jobs report, getting up to it, I believe it's JOLTS survey tomorrow, but I would just say, John, a massive recalibration here as we prepare for September.
Are we making enough progress? Have we made sufficient progress at the Federal Reserve? Do you want to do the recap of Jackson Hole? Sprinkle of hawkishness, Tom, with a patient conclusion over at Chairman Powell in that speech.
I like the $7 gin, $8 gin and tonics at the $1 Million Cowboy Bar. That was the high point.
Do you want to share the bill?
Kaylee's been there. but you know, what's interesting here to me is maybe the theme from Lagarde in her 60,000-foot speech away from September, and that is clarity, flexibility, and humility. That sounds like surveillance on a daily basis.
Balanced. All of the above. No surprises. China looming large over that conference, I have to say, and the slowdown there.
Yeah.
Katie, we need to discuss it. The latest measures over the weekend, cutting stamp duty on stock purchases, limiting IPOs, coming out this morning based on our reporting, limiting selling to some extent as well. That equity market rally was not impressive at the close.
It was at the start. 5.5% would have been the best day in 3 years, and that faded to, a 1.2% gain by the close of trading. The stimulative efforts aren't really sticking, not having the full desired effect that, in theory, China would be seeking here, as they are attempting to shore up the equity market, shore up growth as they're dealing with many fragilities in the economy, and yet nothing quite seems like enough. And the question, I guess, is more coming eventually.
Kaylee's point, Tom, I think is a valid one. We had a big pop at the opening bell over in China, and then it faded, and faded big time.
Yeah, the fade is a thing here, and I think there's a huge lack of confidence. What I would note is the number of thought pieces on China right now. The industry is in full late August roar about where's China going into the end of the year. It's overwhelming, the number of smart articles on China.
Let's whip through the price action, TK, to get this Monday started. Your equity market slightly positive on the S&P 500. First week of gains for the month of August on the S&P 500 last week. Let's see if we can build on it as we close out the month. Into the FX market, euro dollar 108.07, just about positive here by 0.1%. TK 10-year 423.55. 2-year, the 2-year at a new closing high. For the year on Friday.
My variability here, a week out past Labor Day into that Tuesday, is a 191 10-year real yield. I have no idea where that's going to be 8 days from now, but the answer is that, to me, is the single data point in the Bloomberg that matters. I'd also note in the equity market, with all the agony out there, 16.14 on VIX is just a churning VIX here over the last number of weeks.
Katie, that 2-year just short of 5.1% this morning.
Yeah, as we look ahead to what the Federal Reserve is going to do come September, there is still a question as well as to whether the ECB is going to make a move in September. Of course, we had Tom's interview with Christine Lagarde at the end of the week in Jackson Hole last week, where she talked about how inflation expectations need to remain anchored at 2%, but left September kind of a question mark. So we'll look for more clarity at 8 a.m. Eastern time today. Joachim Nagel and Robert Holtzman will be speaking in Austria. We actually just got some headlines out from Mr. Holtzman saying he sees a case for a rate hike if no surprises turn up. Of course, on the more hawkish end of the governing council spectrum, but we'll look for more details coming up in just about 2 hours from now. Then at 10 a.m. Eastern time, we have an important hearing back where I usually am in Washington. Judge Tanya Chutkan is going to hold the first hearing in Trump's 2020 election case, the federal one, in which she intends to set a trial date. Remember, the DOJ is looking for a January 2nd, 2024 trial, just 2 weeks before the Iowa caucus.
Which case is this?
Trump would like to see this in 2026.
Which of the four?
This is the Jack Smith 2020 election overturning attempt, the federal one.
This
Georgia,
is not
of course,
the Georgia
is the state
one. Got it.
There is a hearing in Georgia budget today
We
as
don't
well, but
cover
this is
year's.
the one.
We're only doing this, Kaylee, for you.
Not in this detail, anyway, TK. Katie, carry
I'm
on, please.
overwhelmed.
And finally, today, as she was yesterday and will be for the next couple of days, Secretary Gina Raimondo, the Commerce Secretary, is in China, the fourth administration official to make a visit in just the last several months as they're trying to repair relations. And it does seem the level of optimism of tangible progress in this meeting is actually higher than some of the prior visits we've
Most
seen.
important, you don't see this on radio, most important imagery there is in the houndstooth jacket is one Elizabeth Economy, two to the right of the Secretary of Commerce, and she is truly one of America's experts.
Only you could have
on
spotted
change.
that. I did not see that.
Look, seriously here. You come out of school, you write a thesis, and you make a book, and it goes like, it's like Taylor Swift. It's like a platinum album. That's
Sure.
Liz Economy, where The River Runs Black out of Cornell Press years ago.
Katie, that meeting through Thursday, 4 days of it?
Yes, till the 30th.
4 days of it for Secretary Raimondo. We'll get you the latest update on that through this morning, no doubt. I want to bring you the latest update from Evercore and Julian Emmanuel. He's going to ask the question for us this morning. The reaction to NVIDIA earnings last week added to the wall of worry. Surging interest rates, China, Europe slowing, US retailer caution. Here's the question. Is the pullback more than a seasonal setback? Phil Orlando joins us now, Chief Equity Strategist over at Federated Hermes. Phil, I'll ask the Evercore question again. Is the pullback more than a seasonal setback?
So Julian's a very smart guy. We've been looking for, let's call it a 10% correction in stocks over the course of the August, September, October period, which would be seasonal. The question is, what does valuation look like, these big technology stocks versus the rest of the market? In the first, 7 months of the year, the tech stocks have dramatically outperformed the rest of the market, and we felt that there would be sort of a reversion of the mean during this, third quarter period.
Right.
10-12% is a reasonable place to start, and let's see what the valuation looks like once we get there.
Phil, I'm coming into Labor Day. I'm at the kitchen counter at the second home, and I'm trying to reallocate my portfolio. Am I reallocating with enthusiasm to equities, looking out 3 years, or can I not have a 3-year view because of the jumble of the news flow right now?
No, if you've got a 3-year time horizon, Tom, we're extraordinarily bullish. Our near-term call, somewhat tactical, is somewhat defensive. That we've got a 3% overweight to stocks overall. But our overweights are in domestic value, in small cap, and international. The one area that we've got sort of a negative bias on is these growth technology names, which we think got ahead of themselves. As we look out 3 years, we will have seen peak inflation. We will have seen peak Fed. Valuation levels will be more reasonable. Maybe we get a change in leadership in Washington with better fiscal policy approach. All of that suggests that stocks 3 years from now are going to be in much better shape.
Okay, so Phil, you suggest that we'll see the peak in inflation, we'll see the peak in Fed funds at some point between now and 3 years from now. Can you get more specific about where that is? If we're talking about higher for longer, how much longer, realistically?
So I think we're looking, Kaylee, at about a 6 to 12 month time frame. The inflation has clearly peaked in our mind last year. The question is the divergence between the decline in headline inflation versus core inflation. Core inflation is coming down at a much slower pace. Federal Reserve, in our view, probably has one more quarter point hike up their sleeves, maybe that November 1st meeting, and then they go on pause. But pause is going to last a while. We don't expect them to come back in and start cutting rates until perhaps this time next year. Valuation levels, because of the tech stocks, were extended. Those valuation levels are coming back. Stocks are down about 6% over the course of the last month or so. And then, of course, we've got this big election coming up in November of next year. So it's going to take a year or so for all of these things to shake out. But again, using Tom's 3-year time horizon, we're pretty excited about what the longer term picture looks like.
How does the longer term view on equities conflate with what you expect in the bond market? Because right now the bond market, frankly, looks quite confused, but I wonder how much the rate story is actually what is attributing to the stagnation in the equity market we have seen.
No, a great question. And the backup in rates that we've seen here from 3.25 to 4.25 in benchmark 10s over the last, say, 6 months or so, that's exactly what our duration committee chaired by R.J. Gallo was looking for. The idea is that rates are going to peak here, in this 4.25%, 4.5% neighborhood. And looking out over the course of the next 6 to 12 months, we're going to see rates rally back, into that 3.25% neighborhood. So, it's been painful for bond investors over the last 6 months or so. We think looking out over the course of the next year, with the potential for slower economic growth, bonds will rally.
Phil Orlando, retail got absolutely slammed last week. Does that give you pause on a profitable Walmart trading at 20x times, earnings?
Tom, it certainly gives us pause because one of the things we track pretty closely is the performance of the consumer during April, back to school, and Christmas. And back to school season, we're only 2 months in. We've got June and July data, but retail sales are only up about 2.4% year on year. A year ago, retail sales were up 9.8% over that period of time. We saw the same situation with April. The March and April Easter sales were only up 1.7% year on year. We think Christmas sales are going to be, again, sort of that low single digit. So for a number of reasons, the consumer is slowing down. GDP is 70% generated by the consumer. So that's something we're watching pretty closely.
Phil, do you think there's some tension here between what we're pricing in the bond market, particularly at the front end, which is higher for longer, and what's developing abroad, specifically in China?
So China has been a disappointment, no question. We've got a longer-term view on China that given the problems that they're having right now, it is inconceivable to us that we do not see aggressive fiscal and monetary policy in China looking out over the next 6 to 12 months to try to reverse those fortunes. So we like international in part because we're expecting the Chinese government is going to step in here and try to turn things around and improve the economic fortunes of China over the next year.
Not happened yet in a big way, that's for sure. Phil, thank you, sir.
That's for sure.
Phil Orlando of Federated Hermes. Range of efforts from Chinese policymakers over the weekend. The stock market, Tom, closed higher by a little more than 1%. And to Kaylee's point earlier in the programme, didn't start that way today. Started with a move of more than 5%.
I take huge issue with the OMG we're cratering issue. And I like that Mr. Orlando, with a little bit of gray hair there, talked about a correction's 10%. Dare I say a bear market's 18%. And, often you are supposed to be down 35% if you enjoy owning equities. And we heard that tone from Mr. Orlando.
So we talk about the tone from Chairman Powell on Friday.
Let's do that.
I'll give you a range of views.
Can you see Kaylee there?
In Jackson Hole?
Yeah, she
absolutely.
She'd be out there canoeing.
Canoeing? Did you go canoeing?
No, I did not.
Okay. I can't imagine you in a boat rowing. Just don't see
I portage
that
every single portage.
I don't see that at all.
He'd be the coxswain, just giving direction.
Grand Banks years ago.
Isn't that person meant to be the smallest on the boat?
Yeah.
Right?
Yeah,
Does that work?
You're killing that, Josh. Back to Paul.
It was you that interrupted. Let me go through this again.
Me. What a shock.
Renaissance Macro, neutral speech. Mike Gapen, Bank of America, balanced. Mike Ferroni, JP Morgan, no surprises. Tom, what's interesting, I went back through that speech yesterday evening. And when you go through the breakdown of it, on economic growth, there is a hawkish conclusion. Might have to do more. On the labour market, there is a hawkish conclusion. Might have to do more. And in the whole conclusion, the conclusion to the whole speech, it was navigating the stars under cloudy skies.
I like
poetry.
So basically, Katie, we went from maybe we need to do more, risk management, perhaps we shouldn't do anything right now.
Yeah, it was a Don McLean speech. It was like Starry, Starry Night, Vincent and all that.
You're going to sing for us now.
Yeah, did you see the stars coming out of, they put me up in this incredibly, it was ant-free, folks. My room was ant-free, unlike others.
My bed was not ant-free.
Mine was ant-free.
And those ants were about an inch long.
You come out, seriously, and there's Orion in the early morning sky, and Betelgeuse looks like a landing light at Dulles,
You're stargazing at night.
I'm stargazing, yeah, with telescope and camera.
It's a beautiful sky over there. No street lights. The light pollution that you get elsewhere.
You nailed that.
It's beautiful.
I was looking for the Andromeda Galaxy under Cassiopeia and couldn't see it.
Sam
Stovall. I'd say that, did you?
Of CFRA coming up, live from New York City. Good morning.
We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level. We will proceed carefully as we decide whether to tighten further or instead to hold the policy rate constant and await further data. We see the current stance of policy as restrictive putting downward pressure on economic activity, hiring, and inflation. 2% is and will remain our inflation target.
Chairman Powell, much less blunt than 12 months ago. The speech a little bit longer as well over in Jackson Hole, Wyoming on Friday. Tom, that last line, 2% is and will remain our inflation target. It was interesting. That's the official line from the Federal Reserve.
Right out of the box, yeah.
You speak to the economists around the event and you ask them what the objective is. Is it 2.00 or 2 point something? And they give you an and a little bit of an R.
We're known for our honesty, and the answer is there was a huge disappointment. There wasn't more talk about this at Jackson Hole, more R-starred chat, as the sophisticates say. It was there, as you say, John, in every conversation, but it wasn't codified in the papers. The only paper that really got towards the market was the literature review on debt by Barry Eichengreen. That got a lot of play. Colby Smith really played that up in the FT. But the answer is there was a dearth of R-starred discussion. I was crushingly disappointed.
Barry was optimistic, constructive, wasn't he? What did he say to us on Friday? That we can tiptoe through this issue?
Yeah, Professor Eichengreen, folks, is our noted international economist out at Berkeley, and he made very clear that the debt's there, the debt's containable, but the idea we're going to clear our debt by growth, he really pushed against.
Let's push through some of the price action just to get you started this Monday morning. And good morning to you all just tuning in. In the equity market, we are just about positive by 0.1% on the S&P 500, building on the gains of last week and the gains of Friday as well. Into the bond market, 4.24 on a 10-year. You probably want to know where the 2-year is. The 2-year yield higher by 2 basis points. I think we can round this one up, Tom. 5.1% this morning on a 2-year yield. We added just a little bit of weight to that in Friday's session. It continues this morning.
And the 3-month T-bill, 5.41%, really has my attention. When everything's done, I go back to the real yield right now, 1.91%. For that to break up above 2% would be huge news. It is the end of the summer. We are all recalibrating. Children are being lectured on summer reading and getting ready for school. Part of that across this nation is to get the tone of America. No one does that better than Gallup, venerable Gallup. Their editor-in-chief, Mohammed Yunus, has just been exquisite on the big picture of America. Mohammed, an open question. What is the mood of America as we enter September?
Not good. On the several fronts, not good. If you are a federal government official, no matter what institution you're leading right now, you're facing a record low in confidence. And that even applies to the Supreme Court and the military. But politically speaking, guys, what we see is really the Biden administration struggling to get Americans behind what they're doing with the economy. Big effort the past couple of weeks. You guys covered it. But right now, President Biden has 60+% of people who disapprove of the way he's handling this economy. So as people go back to school and as confidence in higher institutions is also at a record low, people have the economy on their mind this fall.
Does President Trump own the Republican Party, or is there a party out there of our collective memory?
Right now, if you follow the numbers, he does. Nobody is even close to giving him any kind of a challenge in terms of favorable ratings. That being said, his favorable rating is not high. It's 41. It's the same as President Biden's. And again, we're going to see an election where Americans, for the most part, are choosing between options they're not thrilled about, unless somebody new and miraculous jumps in the ring. And it doesn't look like that's going to happen right now.
Mohammed, to return to the subject of President Biden and his approval ratings, and as you know, they remain low on the economy. You have a graphic in your polling that just shows that even over the course of the last year and change, as we have seen inflation continually going down, the line almost moves sideways. He's not getting any credit for things improving. Will the greater credit come potentially on the downside in the form of blame for any further deterioration we see from here?
Yeah, I mean, look, presidents either do a great job taking credit for the economy, or they do a horrible job and they get blamed for anything that's going wrong. I think right now the Biden folks are in that latter category. In contrast, of course, President Trump was doing a pretty good job taking credit for a booming economy before COVID. Those dynamics are probably not going to change, Kaylee. I don't see President Biden suddenly convincing the public that he's doing great. His base is supporting him. Support among Democrats was a little bit lower. It's back up to about 81. So he's really got who he's got. Historically speaking, to really be an incumbent that has a chance, you got to hit the 50% plus mark. And the big debate in the polling world these days is that a dynamic of the past, and are we moving into a different era? Right now, neither Biden nor Trump are even close to 50.
Okay, so on the subject of Trump, I was mentioning earlier, Mohammed, we have this hearing in the Washington case. There's a hearing in Georgia as well today when we're going to be talking about a trial that could fall in the middle of primary season. We understood from reporting over the weekend that all the fourth indictment of the president, his arrest and mugshot in Georgia, seems to have accomplished for him, at least at this point, is raising a bunch of money. $7 million, 4.2, I believe, on Friday alone. Do you have any reason to expect that he will start to see a deterioration in his attractiveness to his base as these legal challenges just keep mounting?
I don't, and here's why. We did a recent analysis looking at the past 20 years of the issues Democrats and Republicans have diverged the most on. The number one issue, Kayleigh, has been the size of the federal government, a 50-point gap between Republicans and Democrats. And you'll notice that President Trump is framing his entire defense essentially based on an overreach of government that's stifling his right to free speech, his right to challenge the election, et cetera. The more that he does that, the more that he's driving right into the narrative that his base wants to hear most of all. So before those reasons, I really don't see it harming him much.
Mohammed, which state is your Gallup guide state towards November of next year? Is there one state where you wake up and say, pay attention to Ohio or pay attention to Georgia? I mean, which is a state that you study?
There are none that we study, really, Tom. What we do is try to understand the national mood and the national average. Now, of course, swing states are key, but really every cycle in the last 3 to 4 cycles, there have been different key swing states. It's really early, I think, right now, depending maybe when we have a one person running for the Republican Party, we can point to a state if that person's connected to it. But it's not just going to be a one-state game this year.
Finally, Mohammed, when I look at your breakdown of the different approval or situations and the approval for the president, I noticed that his highest approval rating is on the situation in Ukraine. As we had on the debate stage, candidates calling into question last week the idea that the U.S. should continue to provide funding. Members of Congress also making a lot of noise about the U.S. not aiding Ukraine in the same way we have for the last 18 months. Where are the American people on this issue?
The American people are mostly behind Ukraine, but Republicans are split on Ukraine. And this is a really persistent split that's consistent now since the beginning of the war. You have half of Republicans that very much are of the opinion that we should not be doing so much. But there's another half of the Republicans, around 45%, that really want to see Ukraine fight through and win back all the territory they've lost.
Mohammed, 10 seconds. What's been the Taylor Swift impact across America? Is it permanent?
I'm from Los Angeles. I think so. I think the future of America has more to do with entertainment than anything right now.
There we go.
Mohammed Yunus.
On top of it, Mohammed Yunus.
Mohammed, thanks for that final point. Appreciate it. TK, Taylor Swift. You going to watch that concert?
No, I can't. I don't do the concerts. It's so
Neither
much
do I.
hero worship.
It's a cultural moment.
Worship. Have you been?
I have not been.
Miss Lyons, I could see you going 3 times.
But I feel like I'm missing out.
Yeah, I do. I have such a respect for Jack Antonoff, the Nationals, and what they've done for her. That, you know, I have my favorite songs like everybody else. Doesn't matter what they are. But the answer is did anybody expect this 2 or 3 years ago? I don't think so.
Could she dance, Tom? Is it like a good concert? Is it really? I was watching some clips the other day. I don't get it. I don't get it.
What do you think?
I'm
She
going to
is
get so
Kylie
much
Minogue?
hate
You
mail.
think you are?
I had FOMO over the weekend. One reason: Lionel Messi playing the Red Bulls, and then I saw him on the bench. And saw how much people paid for those tickets.
It's
and
like
I know
10
he came
grand,
on in
right?
the end, but can you imagine Katie paying up that kind of money and then he isn't playing or isn't starting?
Forget about it. Is West Ham and the Tots for real? They're
Don't
winning
know.
early.
Don't know.
Don't know yet.
Don't know. Early days. Don't want
I'm
to get on that train
studying
too soon.
Everton.
Why Everton?
Because Governor Carney likes Everton, so I
Does
figured
he?
for cocktail conversation with
Is
our
that
new
true? I
chairman of
actually
the
didn't know
board.
that.
He's a very much Everton guy. I'm really
I
studying.
didn't know that. I remember Governor King was Aston Villa.
Mark Carney said to me, "Tom, watch it. You'll be relegated."
That sounds like a threat, TK.
It did.
From New York City this morning. Good morning. This is Bloomberg. Let's get your week started. Your equity market just about positive on the S&P 500, positive here by 0.1%. Trying to build on the gains of last week, the first weekly gain for the month of August. On the Nasdaq right now, positive by 0.13%. Outside of that, here's your headline in the bond market. New cycle high at the close on a 2-year, 5.1%. There and thereabouts on Friday, Tom. We had some weight to that move this morning, up another 2 basis points, 5.0956% on a 2-year yield right now.
You round it up from 5.50, and let's say that's a 6% yield. Are we going to get a 3-month T-bill edging towards 6? John, I haven't even looked yet this morning. I've been so busy recovering from Jackson Hole that the 30-year mortgage is the one that I follow. There's many differences here, 7.61%. Round that puppy up to 8% with closing costs.
We spoke to Patrick Harker of the Philadelphia Fed about this on Friday. Have they messed up this mortgage market for a generation? Tom, think about it. In 2 years...
That's really important
In
statement.
2 years, we have equaled the record low interest rate, okay? And we have got an interest rate now at a high that we haven't seen in 2 decades. That's happened in 2 years. And now what's happened to the mortgage market?
I would suggest on a broader basis, and something that the Philadelphia Fed would follow, is we've destroyed in many different ways the American housing market. And it's just not about New York City and all of its idiocy.
What does it take to recover? Yeah, I don't know. In the FX market right now, 108.17 on the euro. We're just about positive by 0.2%. Kelly went through some ECB speakers to look out for. The Austrian central bank governor leaving the door open to an interest rate hike in the middle of September from the ECB. President Lagarde, Tom, she does not want to engage that debate going into September, does she?
There was a huge discussion off the speech, a lot of them private conversations, but I can assure you the basic zeitgeist is she gave a 60,000-foot distance speech of philosophy, opening with a famed Danish philosopher and closing with a giant John Maynard Keynes. She did so because she doesn't want to talk about monetary policy.
What did she say to you?
What'd she say to me? She said, you know, are you enjoying Jackson Hole? And
that was the essence of the interview.
you look great. And I said, she looks great. And how's your daughter? And
great, okay.
Other than that,
What about the bit that went live on air?
The bit that went live.
The actual interview.
The summary from Christine Lagarde is humility. And that's what they want. And I think a lot of people, particularly the American parlor game of looking at the Fed tick by tick, is like, forget about humility. We just want to know the game to get to September 14th. The headline is, she leaned over to me halfway through the interview. I was saying the meeting was September 16th, and she said, mais non demain,
14th.
le septembre 14.
14.
Yeah, I nailed that.
Okay. Pleased to see your French was up for scratch for that one, Tom. Under surveillance this morning, China's stock rally, erasing most of its early gains after a number of market support measures announced by Beijing over the weekend basically fell flat. The CSI 300 index opening the session higher by 5.5%, then pulling back to a more modest gain of just over 1% at the close. And Kaylee, we went through some of the measures, cutting stamp duty on stock trades for the first time since 2008, limiting IPOs, and then the one that always fascinates me, when they basically reach out to some mutual funds and say, hey, please don't sell more than you buy in today's session.
Yes. So trying to pull out a number of stops here and it just not having the desired effect, not taking hold. I was really struck by our MLive poll survey this morning, John. 19% of participants plan to increase their exposure over the next 12 months. Seems like a pretty small fraction as China is trying to turn things around.
Hey, they have basically poured cold water on this equity market, Tom, for a couple of years. And now all of a sudden they want to get people back in and get the foreigners interested in
Is it a market?
Chinese equities.
How manipulated is this?
Look, if you're telling mutual funds, Tom, not to be net sellers of stocks based on our reporting, then, it's distorted. Of course it's distorted. Can you imagine the American equivalent of that?
Yeah.
Can you imagine what that would look like?
No, there's no American equivalent, but I don't think there's a global equivalent of the fiction that's a Chinese stock market, is how I'd put it. I mean, I just don't see it. What else do we have?
Central bank leaders over in Jackson Hole stressing the need to keep rates higher for longer until inflation is under control. Speeches from Christine Lagarde and Jay Powell highlighting the challenges facing the ECB, and the ECB deciding interest rates, Tom, about a month from now, the Federal Reserve a week or so after that.
On radio, The Promenade by John Ferro and Lisa Abramowitz, Mr. Governor Ueda, President Lagarde, Chairman Powell, missing Governor Bailey as well.
Skip
Bailey
this
would have
one.
been there declaring victory like he did a number of months ago. He said,
Yeah,
we're not going to do
I don't
that.
think anyone wanted to declare victory on the record. Just to go through those dates.
What's great about
Kaylee.
this is I looked out over my right shoulder, John, and there was a bar out there while they were chatting it up.
Do you mean bear or do you mean bar?
There's a bar.
14th
I got
for the
more
ECB.
response, folks. Full disclosure, I got more response from the lyrics of the Ballad of Davy Crockett than I did from anything
I
else
bet.
at Jackson Hole. Thank you, Mrs. Bramo, for bringing that up.
This is my third attempt to give the dates for next month. Okay, just let me get these words out, Tom. 14th for the ECB, Katie, September 20th for the Federal Reserve.
And a lot of data coming in between, beginning really this week. You have JOLTS tomorrow, you have payrolls Friday, you have a PCE, the deflator, the one the Fed looks at, all coming over the course of the next several days. You have a CPI print to get through as well. And for a Fed that clearly is trying to keep its optionality, says it's data dependent, that's going to matter quite a lot.
The CPI on the 13th next month. Let's round up the sports, shall we? Red Bull's Max Verstappen equaling the
Yes.
record for consecutive Formula One race victories over the weekend, winning his 9th in a row at his home Grand Prix, the Dutch Grand Prix, Tom, and moving closer to securing a third straight championship. What a race.
Thank you so much for getting
Thank
me
you
into
to the
this,
weather.
John.
Thank you to the rain.
There was downpour. I mean, it was
Right.
torrential. I mean, it's great. Christian Horner, Red Bull's out there. There's a dike between the North Sea and the course, and he's got his finger in the dike through the whole time because it's raining like no tomorrow. I mean, it was something.
Dominance.
And the strategy, there were yellow flags, red flags. I have no idea what's going on. And there's two rain tires with treads. And the
Inters and full
experts were
weights.
talking
Full
about
weights, yeah.
getting rid of one of them so that there's only one rain tire. I got lost halfway through, but there was a point, John, where the water, they were hydroplaning,
Yeah.
and even the experts couldn't steer.
Well, that's when they red flagged it.
Yeah.
Ferrari not getting
Are you
it done.
okay
Did you
there?
see that Ferrari coming into the
Yeah.
pits and there's no tyres there waiting
Yeah.
for Charles Leclerc?
And you could really
I'm
see.
giving up.
I mean, it's like baseball. Like, there's teams that are like the Atlanta Braves, and there are teams that are like
You
the
dissing
Kansas City
Ferrari.
Royals.
Next weekend, home
It's
race
Italy.
Ferrari, Monza.
Monza.
Oh, the
Monza.
pressure on that team in the Italian
What
press
kind
going
of
into
race
that
is
weekend.
Monza? Is it a Monte Carlo race, or is it more like Miami?
It's a classic race. It's nothing like Miami. It's a proper racetrack.
I just wanted
Let's
to
finish
get
on the
going
golf.
there.
Don't wind me
Figured,
up.
you know,
Let's
get
finish on the
going there.
golf.
Are we going?
Victor Hovland of Norway winning the PGA Tour season-ending FedEx Cup. Tom, $18 million
to one guy?
To one guy for winning that over the weekend.
Ooh,
To
what's
Victor
second
Hovland.
place?
Hovland won last weekend as well at the BMW Championship. So I believe his winnings over the last 2 weekends, $21.6 million US dollars.
And to be clear, in the battle here, seriously, folks, Bloomberg Business of Sports, this is PGA money, not the Saudi money that's being
Not the
criticized.
Saudi money, no. And then we're on to the Ryder Cup, Tom, where there is no money. No money
The
available
British
to
always
them.
win that because they care about it.
Well, it's Europe, Tom. It's Europe versus
Yeah,
the
I
US.
know.
The US cares about it too.
No, I don't think so.
They do. You wanted second place for the weekend, Tom. First place is 18 million. Second place is 6.5.
Yeah, Mark.
I'd take it.
Can you imagine the difference, though? The difference going into that?
That's a hell of a caddy fee. If
So,
you keep-
yes, I'm pleased you brought that up. 10%. Wow. 10%.
So
typically, that's what you get, 10%. It's not bad, is it?
Tom's reconsidering his line of work.
TK used to caddy, you know.
Career.
TK used to caddy.
I caddied at Oak Hill Country Club, where they're the PGA this year, Country Club of Rochester. And, they're in my ear saying,
I saw that
"Nobody
the
cares."
former
Amy's
president.
like,
Did you
"No
see
one
that the
cares."
former president won his
Yeah, that was a
his
shock.
golf club
At
championship? Did you
Bedminster
see
in New
that?
Jersey, yeah.
Shooting a below par. What was it? 67. Or
Yeah,
something
67.
Like that.
I'm going to be below par and thrown out the door if we don't get to our wonderful
Go on,
guest and
move on.
hugely qualified at Aberdeen, Scotland. Abigail Watt joins us now, research economist. Abigail, the planning here into September just seems to be a jumble. My word at Jackson Hole was complexity. Simplify for us how we get to September. What are you focused on within the present complexity?
Thanks for having me this morning. I think you're totally right. It's a very complex environment wherever you look in the global economy at the minute. If we're talking about the US, if we're looking at the Fed, I think Powell's speech on Friday was very much no new news, but the way that he delivered his messaging was important. I think the idea of kind of proceeding carefully and this kind of clear data dependence is something that you can see as a common theme across major central banks, such as the ECB, the Fed, the Bank of England currently. And I think that the key thing, therefore, will be the data that we have between now and those meetings.
You and Aberdeen keep track of innovation, not only in the continent of Europe and in Great Britain, but obviously in the United States. That was a theme at Jackson Hole that got some traction. What's the Aberdeen innovation meter for Europe? Can that jumpstart GDP and equity performance?
So I think clearly there's been a lot of attention on artificial intelligence and the implications of that for kind of productivity growth and the ability for that to kind of boost economies and boost potential growth. I think one of the key things that I would be thinking about, though, in terms of some of those gains from artificial intelligence is the need for them to kind of percolate through the economy. And the question as to whether they are a general purpose technology. If AI is truly a general purpose technology, say like electricity or the computing revolution, then that is something where we will see perhaps a kind of boost to kind of growth and potential growth and in the Eurozone.
On the subject of the Eurozone, we mentioned earlier this hour, Robert Holtzman, of course, a member of the ECB Governing Council, gave an interview to Bloomberg in which he said, if there aren't any big surprises, I see a case for pushing on with rate increases without taking a pause. Abigail, where is the room for big surprises? Where may they come?
I think one of the things that they'll be looking for is the inflation data later this week. Obviously, on Thursday, we'll get the inflation data. I think that they'll be looking for hopefully no big surprises in the inflation data this week. One of the key areas that we've been watching is this balance between weaker activity data and this kind of still stickiness in the labor market and wage growth kind of remaining strong. I think that does create a lot of issues for the ECB in terms of their policy making. One of the key things, though, is that we think they'll remain on hold in September. And I think that's because this kind of messaging from Lagarde of data dependence and kind of perhaps similar to the Fed, this one of kind of caution in this environment where you're starting to see the economy weaken in spite of maybe some of that stickiness in core underlying inflation.
Are we at a tip point on the glide path of the real yield? We're using the 10-year U.S. real yield of 1.91%. But Abigail, if you see these rates moving up nominal, but also inflation-adjusted rates moving up, do they have a glide path and a stable drift to them, or do they fall apart at some level?
I think obviously for the real yield, it really depends what's happening on the inflation side. I think our expectations are that we do continue to see inflation pressures wane in the US economy. There's a number of drivers, for example, some of the shift from kind of goods demand to services demand that is meaning that core goods prices will continue to decline. The energy base effects will mean that kind of headline is continuing to decline. And I think that's the kind of going to be the real driver is whether you continue to see kind of progress towards a sustainable rate of inflation in the US economy. I think the area that we're kind of more concerned about is the kind of stickiness in perhaps some of the core services measures. So I would say that that's one of the things that I would be thinking about there.
Abigail, thanks for the update. Abigail Watt there of Aberdeen on the latest out of Europe and beyond. We'll catch up with Maria Tadeo in just a moment, Tom, about 5 minutes away on the European economy and the latest from your interview with Christine Lagarde on Friday, pushing ahead to that ECB rate decision on September 14th.
Remind me, have we had Maria on since the Spanish women took the trophy?
It's been a while and some controversy around that.
We're going to go to the controversy, but truly, not to make a joke about it, but she's expert at European and Barcelona football.
It's unfortunate that controversy has drowned out the actual win itself. So I think we should lead with the actual win.
I'll let you do that. You'll do it
from the Spanish women's team.
We have less
in a World
chance
Cup.
Getting in the HR timeout chair if you lead with
If I lead it and you don't. That might be sensible. Sonia Miskin's coming up a little bit later as well of BNY Mellon. We'll have that conversation at about 45 minutes from now. Shout out Shay Knight of Australia, Victor Hovland's caddy. So standard rate 10% based on his winnings this year. Could be netting for the season something north of $3 million for the caddy.
If I came home double bag 36 holes, you come home with $22. You were living large.
Not quite the same, is it, Tom?
You put it in your jar, and on Monday morning, your mother would come in and would take $5 down to get the girls to school.
From New York City, Equity Futures Positive. This is Bloomberg.
critically important that inflation expectations remain anchored at 2%. If trade unions and business associations appreciate that in relatively short order inflation will be back to 2%, they will not want to fuel more inflation by having wage or margin increases that would not be consistent with that.
Christine Lagarde, the ECB president, catching up with Bloomberg's Tom Keene going into the weekend. TK, that was an elegant effort to inform the unions not to ask for a pay rise, wasn't it?
Yeah, it was an extraordinary speech. I was thunderstruck in reading it while she was giving it. Matt Boesler of Bloomberg News was hugely helpful in decising it. And Matt turned to me, you'll appreciate this, John. He turned to me like 3 paragraphs in and said, Tom, Philip Lane,
the chief economist.
And that was my second question to her, was who wrote this speech? And she was heated that this was her baby, that Professor Lane, hugely esteemed out of Ireland, had a lot to do with it, as did other people. But she made clear this was her clarion long-distance theme in philosophy. When you open with an early 19th century Danish philosopher, I mean, this is not, Powell's not going to do this in the press conference. He's not going to open with Carl Sandburg or whatever in American philosophy. She did.
Tom, if you open with a philosopher, I'm suggesting that she probably didn't want to talk about September.
Didn't want to talk about September.
Probably fair to say.
I kept Kieran Buchanan's mayor, Tom, ask about September.
Restrictive.
Ask about September.
Restrictive. Restrictive. Let's talk about pay raise, Tom, and let's talk about unions. This is on everybody's radar right now. Yeah. And Kayleigh, you and I are going to talk about this a little bit later around the opening bell, I'm sure. UAW union, so the United Auto Workers, the demands they've got for Detroit's Big Three, 46% pay raise, return to traditional pensions, and Kayleigh, a 32-hour work week. What are they getting, and what won't they be getting?
That's like our work week.
Well, this is the question. Even Sean Fain, who leads the UAW, has called this an audacious request. But given the demands that they are making, it becomes a question of what agreement can actually be reached here, and can it be reached in time, considering the deadline is September 14th. We are talking just a matter of weeks here, and if no deal is reached, it's 150,000 workers who could be striking all Big Three automakers at the same time. We heard Austin Goolsbee of the Chicago Fed at Jackson Hole, of course, that's a big auto district, saying he's really worried about the impact that could have on the manufacturing economy. And of course, it's difficult politically as well for what's supposed to be a pro-union administration.
I stood in the Renaissance Center, basically the GM building in Detroit. Steve Ratner walked by me at the time. He was the car czar. And the answer is they shifted the labor agreement in Detroit in crisis, in bankruptcy. The union now wants it back.
It's revenge. For
Not
the last
revenge.
15
They
years.
just want to get back to where they were. I don't think it's revenge. It's just, hey, this is the way it used to be. These executives are making cajillions of dollars, et cetera, et cetera. We want to get back to the structure of another time and place.
As things stand, I think that September 14th deadline perhaps more interesting than that September 14th ECB meeting. As things stand. Because in some ways, Tom, that union action informs the decisions these central banks have got to make anyway. Labour market power is still very much a thing here in the United States, with unemployment around 3.5%.
Yeah, well, labor market power, whether it's somebody in a state with 2.8% unemployment, or when you look at the risk that we have at Bloomberg, that John Farrell could go over Kayleigh and work for UPS. John in those brown shorts, big brown, you can see it. But there could be more.
part-time.
UPS.
Stellantis part-time.
Yeah, I could see it.
American Airlines part-time.
Top 450,000.
There's some training that needs to be done here, Kayleigh, before this happens.
Probably
But
you'd have a 25,
He'll be working a 40-hour week.
25-hour work week, which is what you and I are working right now.
32-hour work week and 46% pay raise. And to your point, Tom, perhaps revenge is too strong a word, but let me really sort of unpack what that means. It's 15 years in their minds of being underpaid, Tom. And this is a first step to getting back to where they want to be.
I strongly agree with that.
That's what I mean by that. I'm certainly not saying it's not justified. A lot of people would say it is justified. And I mentioned this a few times as well, Tom. Every single year for the best part of a decade, these individuals have sat in front of a manager who's told them inflation is low, this is your pay rise. That's been the conversation
2%.
across this country. And now people want to go to their manager at the end of the year and say, hey, inflation is not 1% anymore.
Yeah.
The last 10 years, you told me X. Well, now it's about Y. Things have changed.
Just because of time, I'm going to dash on here. We'll come back to this theme, not only today, but dashing into September as well. An important conversation now. We really need to catch up with her after a 6-week holiday across much of the Grand Tour for Maria Tadeo, our Bloomberg European football correspondent, joining us from Brussels. And we've got to begin with Ms. Tadeo on her Spanish victory.
And congratulations, Maria. I've said it's a great shame, and it's fantastic to catch up with you, that the win itself has been drowned out by the controversy. Now, Maria, can you tell me if that's happening domestically in Spain as well? Is that the same story? Has that World Cup win been drowned out by the controversy afterwards and elsewhere?
Oh, yeah, absolutely. And this has really become a political story now in the country. And remember, just to bring everyone up to speed, on Saturday, FIFA, and it's very strange for FIFA. Obviously, we know they handle the world of football in Europe and they deal with that. They put out a statement with some very strong language, actually, saying that they will suspend the head of the Spanish Football Federation because there is a probe into inappropriate behavior for the next 90 days. So pending that investigation, he will not be able to deal with the domestic and international operations of the Spanish national team. And that is relevant because, Jonathan, you know this, I'm sure, Spain is actually trying to get the World Cup for 2030. They want to be the host of it. So the optics of this are just terrible. Again, all of this going back to that kiss in the World Cup. But yes, this has really become a story now about the politics and almost even about feminism, really. This, because remember, he blamed fake feminists. Obviously, that has infuriated the government, which is very progressive.
Just because of time, Maria, I've got to march on to the 6 topics at hand in Europe. And to me, over the weekend, even in America, the slight headlines on the war in Ukraine. And the singular feature is Ukrainian victories against Russians, where Mr. Putin, by reports, has to send in so-called elite troops. Give us your take on this. You're encyclopedic on it. Who's winning the war?
Look, it's a very good question, and who's winning this war? Again, it depends who you ask, but the overall theme, and especially when you ask those who are not involved and kind of oversee this from the outside, they say that the way to portray this is that this is going to be a long war, and they're not making advances, maybe perhaps as fast as expected. The Ukrainians, however, they push back, and they say it is a difficult war because, well, the Russians have had time now to really trench. And Tom, we're talking about almost a trench war in 2023, but they've had time to really reinforce their positions. Ukrainians also say that a lot of the weapons that have been offered for the country, there is a lag between the operations and the training that goes with it. And again, the implications perhaps that may have on the battlefield. But Tom, a lot of the reporting that we do behind the scenes really suggests that this is not a story for 2023. This is probably now a story standing into 2024. And that takes us to the U.S. election. I think this is the one thing that Ukrainian officials really care about, who is going to be in the White House next year.
Well, and central bank officials also have to care about the geopolitics, Maria. In the interview with Tom just on Friday, Christine Lagarde was talking about geopolitics as one of the big shifts that she is seeing. What did you make of her reluctance in that conversation and in her speech to address the month of September?
Look, I think there was a mismatch between the expectations of the market that wanted to get clues, almost a roadmap to September. It was clear, especially in the conversation with Tom, that this was not a Christine Lagarde that wanted to talk to markets. She wanted to be intellectual. She almost wanted to take a step back from the daily tribulations of the economy, the meeting-by-meeting approach, and actually talk about the big picture and the changes to the economy. To me, it was very interesting how she said you have to look now at almost a new playbook, big changes in the labor market. We see that play out in Europe. Energy security. This has been top of mind in Europe for a year now and will continue to be as long as the war is going on. And then she also talked about the geopolitics. And look, I see it repeatedly. Before the politics, people thought there was a separation between the central bank and the work of the commission, but increasingly they tie as one. So I thought it was very interesting, an interview where obviously she did not want to send a message about September. Again, she talks about the data and she wanted to be at almost her most intellectual to date.
A whiff of stagflation over in the Eurozone. TK. Maria, wonderful to have you back on the programme. Maria Tadeo there of Bloomberg out of Brussels this morning.
How does she take us?
Going into that ECB decision on September 14th. Got to move.
Europe's
just got it right. Honestly,
rules.
Just the way it should be, TK. It's just the way it should be.
I have like
1 month
42
off in
days
August.
left for the end of the year.
When are you going to take it?
I gave him to Bramo.
Is that where Bramo is?
Yeah.
She's using your vacation. Did she extend the trip in Jackson Hole for a week?
I don't know what she did. I think maybe she's up by Banff, as they say. That's
Banff.
B-A-N-F-F. It's like
so they've got a
Jackson
nice lake
Hole
there,
North.
right?
Yeah, they got a big
Banff.
lodge. It's like this Victorian monstrosity.
Isn't that Canada?
Yes.
Yeah, nailed that, John.
Thank you. Thank you. Is that geography done for the day?
Yeah.
Hopefully.
That's it.
Sam Stovall of CFRA coming up very shortly. Katie, welcome to the programme for the rest of this week. Yeah, just random geography and random trivia. Don't even try and prepare for any of this. There's no point. Equities right now.
Doesn't prepare.
On the S&P 500, we're positive by 0.1%. The two-year yield climbing by a couple of basis points. The two-year this morning just short of 5.1%. Yields up, and away over the last month, and that move sticks at the front end from New York. This is Bloomberg.
2% is and will remain our inflation target.
It's critically important that inflation expectations remain anchored at 2%.
If the right inflation target is 2% and they want to get there in a credible period of time, then we are not sufficiently restrictive.
We have to get inflation down to 2%. We all agree on that. We're all committed to that. The question is how to get there.
If we're stabilized around 2.5% and the economy's humming along, are you really going to break it?
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
The last week of August. Where did summer go? Live from New York City this morning. Good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Ferro, together this morning with Katie Lyons. Your S&P 500 positive by 0.1%. That line from Chairman Powell, 2% is and will remain the inflation target of the Federal Reserve. Tom, is it and will it? Still a question out there for many people on the sidelines of Jackson Hole.
A little bit of humor there as well, as they're at 2%, and Dr. Coronado's up to 2.5%. But that's the raging debate. And I would suggest, John, some real disappointment at Jackson Hole that this was not addressed in the papers. It was not addressed more intelligently, I should say, about how do you get to where you determine that rate. It was devoid there.
The neutral rate.
All these distractions.
Kind of batted away by Chairman Powell.
Batted away, perfectly said.
In the speech.
Yeah.
This is something that came about. That expectation existed, Tom, because inflation data, yes, has made progress, but is still elevated. And output, GDP growth, this economy is still outperforming, even with rates of 5.5%. And I think that's what's introduced, Tom, this conversation coming into Jackson Hole, but clearly not something Chairman Powell wanted to entertain.
I don't want to derail the opening, but I look at one number, the 11 ratio. The 11 ratio Bloomberg Financial Conditions Index does not scream restrictive. It screams nicely accommodative. The chairman has failed, not like a personal failure, but the Fed has failed to get us to a restrictive statistic based on Michael Rosenberg's great academic work.
One thing the chairman entertained was the prospect of doing more. Katie, we discussed it in the last hour. You go through that speech piece by piece on the economy. At the end of that, he suggests the prospect of doing more. On the labour market, at the end of that, he raises the possibility of doing more. And then at the very end of the speech, he starts talking about, what was it? I've forgotten that line.
Navigating
under
the stars, but it's cloudy.
Skies, something like that. Yeah.
Something very poetic. But it seems like the message was... Sorry.
This is how it works, Kaylee. You just carry on talking and you'll get this bed of disruption. Sometimes singing, sometimes it will make sense. Other times, quite often, it won't. But you just keep going.
Don McLean, a few years ago.
Okay, good to know.
My takeaway from the chairman...
Has no idea who Don McLean is. No clue.
She's not alone.
Yeah, you're right about that. My takeaway from the chairman was there is a lot that they don't know. However, their bias is still going to be to do more rather than to do less because they are trying to win this battle. And to your point, John, him talking about the economy, talking about above trend growth and how that could actually be problematic, and the inflation fight and the resilience in the economy we're talking about, the idea of a soft landing, that could be not a good thing for this Federal Reserve.
Katie, well done. That was good. Thank you. You got through it.
Thank you very much.
You got through it.
Should I hum a few bars or something?
If you can. You want to sing some lyrics?
Yeah, no, I don't think I can.
No, I didn't think so.
I'll leave
Let's
that
get
to
to
Tom.
the price action on the S&P 500. Equity futures right now positive by 0.2%. Over in China, a big effort to put a floor under this equity market. Tom, they're cutting stamp duty on stock purchases for the first time since 2008, limiting IPOs. Based on our reporting this morning, they're even asking some mutual funds not to sell more stocks than they buy, and yet that stock market had a move of more than 5% and closed higher by just 1 point something.
Yeah, it's a day-to-day grind in China, and at some point they're going to blink based off economic data. And I thought about this early coming in with the Bentley this morning, John. And the basic idea to me is if China gets a run rate sub 5%, even 4.8% or 3.8%, guess what? When the facts change, President Xi's going to change.
Well, here's the fact right now in the bond market, 5.1% Kayleigh. Yields up by 2 basis points on a 2-year to 5.1%.
Yeah, as we beat the drum to September and whether or not we're going to see a hike or a pause at the Federal Reserve, and maybe one at the ECB as well. We've talked at length about how Christine Lagarde gave no clues about what is coming in that September 14th meeting, but we'll look for more clues from other members of the Governing Council. Just about an hour from now, 8 p.m. Eastern, we'll hear from Joachim Nagel as well as Robert Holtzman speaking in Austria. Of course, we already heard from the latter. He gave an interview to Bloomberg this morning in which he said he does see a case for a rate hike if no surprises turn up. At 10 a.m. Eastern time, back in Washington, D.C., there is a hearing in Trump's federal 2020 election case. We are expecting a trial date to be set today. The DOJ is looking for January 2nd. Trump's defense team is looking for August of 2026. So we'll see where maybe in between those the judge comes down. And finally, also today, Secretary of Commerce of the U.S., Gina Raimondo, is in China. And we actually just are getting some headlines out of her speaking in Beijing. She says trade can bring stability to U.S.-China ties. It is profoundly important to manage that relationship. She also spoke with her counterpart in China, the Commerce Minister Wang, for more than 4 hours, in which they discussed strategic interests, agreed to communicate regularly, and agreed to launch a platform on export control info. So we'll see what else tangible comes from her visit there that lasts until the 30th.
Kayleigh, would you say that one of those individuals is sitting in a stronger position than the other, given what's happening with their economies at the moment?
At the moment, it looks like China may be negotiating or at least talking from a position of relatively more weakness, given the fragilities that exist in that economy and their stimulative efforts, their attempts to address it that haven't yet seemed to really stick to this point.
Falling flat. Kayleigh, thanks for that. More on that a little bit later. Joining us now, Sam Stovall, Chief Investment Strategist over at CFRA. Sam, wonderful to kick off this hour with you. You've got this line in your research, September's slippery slope. Can't believe we're closing out August already. Sam, what is September's slippery slope?
Well, good morning, Jonathan. In terms of the slippery aspect, what is it that's going to cause possibly share prices to continue the digestion of gains, I think is the uncertainty surrounding the coming FOMC meeting. Also, the PCE data this week that could end up showing a backward uptick on year-on-year for headline as well as year-on-year for core. And that's going to give additional reason why September is the only month to decline more frequently than advance.
Sam, your history is to get beyond the moment, get beyond September and, dare I say, even Q4. Are we looking to a second leg of a bull market?
Good question. I think so, Tom. When you look back to the election year of all first-term presidents since World War II, the market has never declined. So that's not a guarantee, but it certainly is a comforting statistic to say, there's a good possibility that the market will be higher next year as well.
The chairman is looking at the stars in Jackson Hole. You and I are the only ones that remember Don McLean and Vincent. Clearly, Kayleigh and John don't. So let's go there, Sam. You own the stars. Is the migration from 4 to 5 stars, or are you seeing more star downgrades at CFRA?
I think we're holding still right now. We have essentially all of the sizes, styles, and majority of sectors below their 50-day moving average, and 5 of the 11 are below their 200-day moving average, along with small cap stocks. So I still think there's a little bit of digestion of gains that is in order, but I think that we are going to experience a recovery come the fourth quarter of this year. I don't think that the Fed will be raising rates in September, but we do see the possibility in November. But then our belief is that will be the last one for this cycle.
Okay, but it's one thing for the Fed to stop hiking, Sam. It's another for the cuts to start. When do you anticipate that might happen? Does the equity market have a little bit of over-optimism on that front?
I think that is a possibility. Higher for longer relates not only to the Fed's rate tightening program, but also for the year-on-year change in headline PCE. We don't see it approaching the Fed's target until the end of next year. So the real question is, how long will they maintain an elevated interest rate? Typically, the span between the last rate hike and the first rate cut is 9 months, and the market does exceptionally well in that pause period. But this pause period has continued to be moved out. Our earlier expectation was sometime in the second quarter of this year, but now apparently it's 6 months later.
Okay, and we know that the Fed's decisions are going to be informed by the data. They are a data-dependent Fed. Are the catalysts for the equity market also likely to be economic data more so than anything else? Are markets, too, also data-dependent?
Well, I think that they will need to have confirmation from the data. Prices lead fundamentals, and I think that's one reason why the market has done so well so far this year, even though expectations are for a flat to down earnings year in 2023 when all is said and done. Expectations are for a 12% advance in 2024. So I think we need to actually start to see earnings improve. We're expecting actually the third quarter at about a 5.5% decline. The second quarter at a 5.5% decline to actually be the 55th of 57 quarters in which actual results exceeded end of quarter estimates. And it's likely to be the same story for the third quarter, which is expected to be off by less than 0.5%. So things are getting better from a fundamental perspective.
Hey, Sam, thank you. Sam Stovall there of CFRA. Closing out August and looking ahead to September, which kicks off on Friday. Can't believe how quickly that's come around. Let's bring up one name, one stock. Hawaiian Electric Industries. We've just had a statement from its subsidiary, Hawaiian Electric, a statement addressing the fires in Lahaina. I just want to bring you a couple of paragraphs, some quotes from this. Hawaiian Electric says in this statement that a, quote, morning fire on August 8th appears to have been caused by power lines that fell in high winds, that the fire department responded to and reported was 100% contained. Then in the afternoon, according to this statement, its power lines in West Maui had been de-energized for more than 6 hours. A second fire, referred to as the afternoon fire, began in the same area. And Katie, from what we understand, the cause of that fire hasn't been determined. That stock is up by 35%.
It is, but remember, this is after a 72% decline we have seen in this name since August 8th, when that fire happened in Lahaina, because of the concern that this company was going to be found liable, that we could see something akin to what we saw with PG&E in California, where the legal liabilities would be in the billions of dollars should they actually, their equipment rather, be found as a reason why the fire had spread. It seems like what they are trying to address in this statement is that that is not the case, at least for the later fire that then, of course, had horrific, catastrophic, deadly consequences.
To me, it's almost too early for these kind of discussions because I think the horror of what happened is still with us. But I'm fascinated how the tourist industry of Maui rebuilds. I don't know what that'll look like.
The latest on the wildfires in Hawaii. More on that a little bit later. If you are just tuning in, welcome to the programme on the S&P 500, positive here by 0.1%. Elsewhere in the bond market, yields basically unchanged on a 10-year at 423.55. On a 2-year, the 2-year yield at the front end of the curve up by 2 basis points to 5.1%. Why didn't you just say he was the American Pie guy? Why didn't you just... You know,
I know the song.
We all know that song.
Don McLean, and what's stunning to me...
We could have sung along with you. It could have been a big moment for this program.
For 8.5 minutes.
We lived this, and Don was legit from day one. He had an incredible craft. And what was interesting was the hugeness of American Pie. I mean, I remember when colleges literally had courses where you would take a course and tear apart American Pie. But there were so many other songs, somewhat like Gordon Lightfoot, but even more so. Lightfoot never had the ginormousness of American Pie. There were these other songs, and, alluding to Chairman Powell's comments, this was Vincent. Which was, it was a dated ballad. This is 52 years ago, Kaylee. This is a few years back.
Yeah, 1971.
Don McLean right now is 49 years old.
I was negative a couple decades at this time.
TK, aging yourself.
Grandma would never say that,
Tom was in the clubs in the 60s. Got to share some of those stories, Tom. They're good stories.
I talked to my father the day Neil Armstrong died, and he said to me, we were so lucky to live that generation. I feel that way about music, and that we were so lucky to be. I have the clearest memory of sitting on Mike Hasenauer's bed looking at Sgt. Pepper's going, are you kidding me? Just as one story.
You're not a fan of the auto-tune music these days? Because I'm totally on board with you.
When you sing like I do, you're a big fan of auto-tune. That's a different story. But the answer is yes, some of the songwriting craft is...
Lost?
Lost.
Katie Nixon and Northern Trust coming up from New York City. Good morning.
we can continue to maintain strong consumer spending, real wage gains, a tight labor market, and continue to ease off on inflation. That's certainly been the pattern over the last few quarters. And so as long as we can maintain the tight job market and continue to see inflation ease, I don't see why those trends can't persist.
That was the political view, the outlook from Jared Bernstein, the chair of the White House Council of Economic Advisors, speaking to Bloomberg going into the weekend. Fantastic to see Jared over in Jackson Hole, and good morning to him as well, Tom. He is a regular listener to this program.
He's an important voice. He's been a huge supporter of what we've done for well in excess of 20 years. He's a perfect example of the power of Washington and America think tanks. He drove the bus at Economic Policy Institute and the Center on Budget and Policy Priorities. It was an inspired selection by the Biden administration. He was the liberal think tank economics guy, John, that the conservatives were forced to read.
I'd like to hear more from Jared as well.
Yeah.
Robust exchanges whenever you hear from him.
Yep. He's
always.
The conservatives always read Jared Bernstein.
Well, as he's talking, though, about the Biden administration and the idea that inflation is coming down, he's confident it's going to stay on this trajectory. I'd like to recall the conversation we were just having last hour with Mohammed Yunus of Gallup, where the president has 37% approval on the economy. No matter what the economic data is saying, the feeling of the American voter base is different.
Yeah.
And let's get to that right now. The blended number, all in, away from the economy, Ukraine, and race relations, is the president of the United States with a sterling approval rating of 42%. That leads to a conversation the end of August and into the autumn. Anne-Marie Horton joins us now. Bloomberg Gallup, Washington correspondent this morning. Anne-Marie, Gallup carries a certain authority, as we did when speaking with Mr. Yunus as well. Color for us, what does a 42% approval rating mean for this president?
Well, I think the issue is more what Kayleigh just mentioned. It's the approval rating on the economy, which is actually lower than his overall approval rating. And when you look at where we might be in November of 2024, the economy still is ranking high on individual issues and why they go out and vote and how people feel about this economy. No matter what Jared Bernstein wants to talk about when he talks about the data and some of the good data we've seen in the U.S. economy, the fact is that is not how people feel. And that is because they are paying higher prices, and they continue to pay higher prices, even though the rate of inflation is coming down, for their basic necessities, like rent, like groceries, like gasoline. And that is the issue this president faces. But I'd bring you to another poll this morning from the AP, which overwhelmingly shows many Americans just feel this president is too old to be running again. And they also didn't have the nicest things to say either about his potential rival, former President Donald Trump, if he was to get the nominee.
Emery, what is the Biden plan, or I should say point of discussion, to get to the first Tuesday of September? Where do they want to be coming out of Labor Day?
Well, the president just got back from his holiday, his trip in Lake Tahoe. And right now what you see from the schedule for the week is he's going to be touting these similar agenda items we have heard through the president throughout the year. They are trying to sell, I'm even seeing ads on television, they are trying to sell the Inflation Reduction Act. Because remember, when you look at the polling for the Inflation Reduction Act, Americans don't really understand what it means and how it could help them or benefit them. It would benefit them if you had the availability to buy a brand new EV or the money to upgrade your roof to solar panels. These are some of the rebates that are in it. But they are still trying to explain everything they've done. So things that will come up this week, obviously they're going to have a speech regarding the 60 years on from the March on Washington. They're going to be talking about how they're allowing Medicare to now really go back to the drug pricing, to the pharmaceutical companies to talk about drug pricing. And of course, they're going to talk about selling the Inflation Reduction Act, the CHIPS Act, as well as hard infrastructure. All of this will be a continuous theme to November of 2024, and they try to encompass all of this as Bidenomics.
Of course, Anne-Marie, Biden hasn't just been touting Bidenomics. He has also been touting himself as a pro-union president. And as Tom asks about the month of September, September 14th, or really after, could be a pretty rough time for this administration and the economy overall if we see the United Auto Workers actually go on strike. Given their demands, a 46% pay raise, a 32-hour work week, how problematic could this get?
Yeah, not just that. They really also want to make sure EV workers, when you see these companies really start to expand in the EV production, because of some of the work and the legislation the Biden administration has pushed through, they're starting to build up these battery plants, and those workers are not unionized. And that really bothers the UAW president. The UAW has authorized, the workers have authorized their leaders to strike if they do not get the deal they want. And right now, it is miles away between what the UAW is asking for and what the car companies say can be done to make sure that the car companies are still competitive. But these UAW workers feel like they've gotten bad deals for years, and they want to make up for lost time. And a lot of them definitely feel left behind. We know that this has drawn a lot of stress within the White House, because the president already has spoken about it and he's put out a statement about it. And we've spoken to the president's former labor advisor, who helped him coin the term that Biden was going to be the most pro-union president in modern times. And that individual, Mr. Harris, he thinks that this is going to be a strike, and that's going to be incredibly difficult for this administration.
Tom always told me that people don't wake up in Washington, D.C. before 8 a.m. Are they starting drilling in the D.C. studio at 7:22?
Well, we're facing an election November 2024. Kayleigh and I have asked for some upgrades. So, yeah, they start as early as I do.
OK. AMH down in Washington. Anne-Marie, thank you. Katie, you have to put up with that every single day?
Yeah, often.
In the studio?
Reno.
What are they doing?
It's actually the ceiling of the studio. I think it's the floor above. In D.C., it's a smaller operation. We don't have the whole skyscraper like we do here in New York. So it's
Are you getting a second floor? It's just someone above?
I think it's someone above.
OK, great.
Yeah.
TK, the latest down in Washington. I think Katie's right to focus on the demands that we're seeing from Detroit at the moment. And Lisa's mentioned this a few times over the last week. We've seen a lot of evidence of labour power over the last year. Agreements for UPS, agreements for American Airlines. What we haven't seen are big strikes. And Tom, the potential for that to happen across Detroit's big three from the middle of September is something we can't ignore going into September.
And the downtime of strikes, I wonder if we haven't seen big strikes because there's a huge cost estimate of what those strikes mean for UPS or whatever as well. So they come to an agreement. They come to a solution. And I don't know where, within a 32-hour work week that
where is
clicks
the agreement?
in for Detroit or Dearborn. But the answer is these are bold demands. And yet there's probably a huge, I don't know, do they want to strike? I mean, I don't know what the inventory is. What I know in the zeitgeist of here of August, all of a sudden EVs, I guess, aren't selling like they used to sell.
Well, but this really is the question. This is supposed to be energy in transition and theoretically an American workforce that is going to have to transition along with it. But these workers want to be protected. And what you hear from the administration is that there has to be a way for everyone to win. But this is going to get much more difficult to broker if we're September 10th, September 11th, September 12th.
Which side is the White House on?
Exactly. And do they actually have to get involved with just an acting labor secretary in Julie Su, who, of course, still hasn't been confirmed?
Well, we got to get to September 11th, but first we got to get through September 2nd. And, John, you know what September 2nd means. I mean, it's a big football game, not in Knoxville.
Okay.
It's in Nashville. It's UVA versus Tennessee, number 12 ranked Tennessee.
And not ranked.
UVA does not have a good football team.
No.
You're a basketball college.
Basketball, swimming, soccer, lacrosse, tennis, basically everything else.
This is inspired. Matt Gagnon, bring it up again on radio, folks. This kid is 34 years old. He's a walk-on graduate student at UVA, an ex-Marine helicopter pilot. I'm sorry, this is so cool. I got
That's
goosebumps.
Very cool. You're
34-year-old kicker.
This. I didn't know.
Well, that's because you only pay attention to UVA basketball. But John, I love this idea. Like in my youth, they let the kids from Vietnam come back and play college football.
That's cool. I like
23,
that.
24, 25. This kid's 34, a graduate student at Darden, and he made the football team as a walk-on.
So you're saying there's a chance that we could go back, you could play ice hockey again, and I could play Division I soccer?
No one's calling it
Tom's
the
going back to caddy.
Yeah, exactly.
You can caddy for the golf team.
But I'm
also
sorry,
very
this
good.
is inspired as well. I mean, this is enough to get fired up and beat the dreaded Orange of Knoxville.
Is that a big game? I can't get excited about that.
No,
UVA,
I don't. They play
Knoxville.
Duke late in the season. I guess that's a big game.
Would you go and watch that kind of game? No, no. You see, Katie wouldn't even turn up for that game.
No, she wouldn't.
Basketball,
the
definitely.
The ladies of UVA at Bloomberg are all basketball.
Sonia Miskin, of BNY Mellon coming up shortly from New York City. Equities positive by 0.2%. This is Bloomberg. The opening bout a couple of hours away. Going into that, your equity market to kick things off this Monday. Slightly elevated on the S&P 500, up by 0.2% on the S&P. On the Nasdaq, up by about 1/3%. Doing our best over in China to stimulate this equity market. Cutting taxes on stock purchases for the first time since 2008. Limiting IPOs. Telling some mutual funds, according to our reporting, not to buy, Tom, in fact, not to sell, and not to sell more than you're buying. Effectively is the message coming out of China. And yet still, the CSI 300 popped 5% and some, and then faded big time into the close for a gain of just 1%.
Let me editorialize it. I'm a huge fan of the former governor of Rhode Island, but forgetting about that, John, rule number one of diplomacy, including Ambassador Nicholas Burns over there, is show the flag even with all the debate. And I'm enthused here in that we're getting up and saying, let's go. And I believe it's a 4-day trip. It's not just over and back. This is like some serious commitment here by a set of officials to maintain the dialogue under maximum stress.
So let's get straight into that conversation. Under surveillance this morning, U.S. Commerce Secretary Gina Raimondo in Beijing, looking to expand business ties in China throughout this week, as Tom mentioned, through Thursday. The Secretary of Commerce telling her Chinese counterpart the following, quote, "It is profoundly important that we have a stable economic relationship, which is to the benefit of both of our countries and, in fact, what the world expects of us." Raimondo would also go on to say, of course, in matters of national security, there is no room, Katie, to compromise or negotiate.
This is what we continually hear from the administration, is that the aim is to protect U.S. national security interests. It is not to hold China back economically. And we actually were hearing from the Commerce Secretary speaking just in the last hour, and she said Chinese economic growth is in global interest, but it speaks to the difficulty, the needle you have to thread when the U.S. is trying to protect national security interests, and in doing so proposing various restrictions on outbound investment into China, on specific tariffs that are still in place, while also not trying to poke at a very fragile economy and risk the ripple effect that could hit the U.S. as well.
Katie, to your point, I think we're on the same page. Tom, it is in nobody's interest, from purely an economics perspective, for China not to deal with this in an orderly fashion. We need them to be able to deal with this in an orderly fashion from a global economic perspective.
We began strong in Jackson Hole with Adam Posen on this at the Peterson Institute. Just the two essays in foreign affairs, folks. Dr. Posen of the Peterson Institute and Ian Johnson writing on it shows the absolute immediacy to be knowledgeable and to address this and to interpret the reaction that we see, reactions, plural, that we see out of Beijing.
It feels so strange to say this, but we get the payrolls report for August on Friday. September is just around the corner.
That's very strange. You'll be here.
I wanted to give you a sneak peek of the number, and we'll talk about whether we're here or not in a moment, Tom. Just shy of 170,000 jobs in August is the estimate. Unemployment expected to hold at 3.5%. The average increase in job growth over the past 3 months would be the smallest since the start of 2021. Just seeing that deceleration, Tom, and that's the objective. So we're told at the Federal Reserve.
I'm going to go to David Kelly of J.P. Morgan, who I think Dr. Kelly makes clear there's a negative payroll statistic out there somewhere. And I don't know where it is, but we're taking our sweet time to get there.
Won't be here Friday.
We won't be on Friday, but
you'll be here Friday.
I'll be here on Friday. I'm looking forward to it. I don't, the kids are like, they're back. They're like in their school thing, and they're like worrying about this and that.
September weather in New York is the summer equivalent in
John,
the UK. If we would dream of a summer like the September you get in New York. I'm not letting go of summer.
John,
I do that
we go
every
to
year.
Jackson
Hold
Hole.
on to it.
John, we go to Jackson Hole. We come out from the walk-up that I have in Manhattan, the leaves beginning to change across Central Park.
You love that,
Just
don't
the
you?
autumnal change that we're beginning to see.
What is it? Leaf peeking? Leaf peeping? Okay.
Leaf peeping. I was leaf peeping.
In Japan, Momiji
Just a little. Yeah.
Oh,
very good.
Good stuff, thanks. Let's finish on this. Florida's Gulf Coast preparing for tropical storm Idalia. The storm is expected to make landfall on Wednesday as a Category 1 hurricane. Some areas of the state could see as much as 10 inches of rain and flash flooding later this week. And you're reminded, Katie, in moments like this for Florida, that Governor DeSantis has a day job.
Yeah.
Has a day job away from the campaign of trying to become the next president of the United States.
Yeah, and he's going to have to step away from that campaign effort this week in order to address the potential crisis that Florida is facing, as well as, of course, the aftermath of a shooting we saw in Jacksonville over the weekend. So he is in Florida for the time being, as he is languishing as well in the polls as he tries to campaign for president of the United States.
And Tom, it's that time of year, hurricane watch in Florida.
Yeah, and it's going to be serious here with the summer that we've had. The pros are telling us, pay attention to this. We'll do that with Rob Carolyn giving us terrific weather perspective. On the weather of central banking, Sonia Meskin is hugely competent. Head of U.S. macro at BNY Mellon. She's had the toughest job in economics, which is advising people at the New York Fed about the real world. Sonia, what was it like advising people at the New York Fed? That is the crucible of foreign exchange and market analysis, given all the Fed blah, blah, blah. What was it like in that job? I mean, how do you survive day to day at the New York Fed telling smart people what to do?
Well, it was super interesting. I think one of the key takeaways, of course, is the relationship between economic fundamentals and financial markets. And sometimes they're tightly connected, and sometimes they're quite divorced from each other.
Right now, the word for me at Jackson Hole was complexity. How much is the complexity that you see right now? Gauge that.
Oh, an enormous amount. And I think that most speakers admitted it, included Chair Powell. It was quite interesting for me also the things that he did not discuss that are also complicating the picture. For instance, the situation in China, how does that play into the Fed's reaction function? Our fiscal expansion, how does that play into the U.S. Fed, the Fed's reaction function? And finally, what's going on in the labor market? Are we seeing structural changes, or are we seeing still the percolations from the temporary COVID shock?
Well, Sonia, to the point on the labor market, the resilience we have seen there, supply and demand, which still seems like it is mismatched, even as the Fed talks about progress toward making it better balanced. But combine that with also the above trend growth that we are seeing and that the chairman talked about. How much longer can either realistically last? When do those lagged effects of tighter policy really start kicking in?
Well, that's a great question, of course. And as you guys just mentioned, even though we're expecting smaller gains in payroll numbers, the unemployment rate is still very, very low. Again, precisely the point that our fiscal policy is actually expansionary. And so I do think the strength may persist into the next year. But then, of course, higher rates do at some point begin to bite more, especially as corporates begin to refinance into a high rate environment.
But do they begin to bite enough that the Federal Reserve is actually going to have to turn around and start easing policies? Sonia, what is your expectation on 2024 and whether any rate hikes could actually come? Or cuts, rather.
Expect that to Yeah, we do expect that to start happening next year, but we also believe that, of course, the Fed will have to upgrade its growth forecast, its inflation forecast, and downgrade the unemployment forecast come the September meeting this year. And that would entail also some upgrades for 2024.
Sonia, when I look at where we are, we have to stagger the meetings. How do you look at the September-ish meetings of different banks? Or are you looking out to November, December, and dare I say the first meeting of 2024?
Yes, of course. And the divergence that was discussed at the Jackson Hole meeting, the global divergence, is going to be quite important as well for our forecast, because, of course, the U.S. is doing quite a bit better than Europe and China at the moment.
Well, I guess it's there, but, this didn't really come up at Jackson Hole as Jerome Powell is central banker to the world. I mean, Lagarde made a splash and Ueda showed up, which was all great in that. But give us the level of internationalness of Jerome Powell right now after Jackson Hole. Is he really central banker to the world?
Well, he has to be to some extent, right? We witnessed this, the impact globally, recall 2013, when we saw considerable outflows from the emerging markets, when, balance sheet tightening started getting discussed. And again, in 2018, when the Fed began raising rates. So I do think that the emerging markets, for instance, are better prepared today than they were in those two previous instances, but it's still a risk to them, of course.
What about China specifically? You just mentioned how the U.S. is doing better than both Europe and China. Given some of the efforts we have seen, attempts at trying to stabilize things, to stimulate the equity market, or at least put a floor underneath, how much further do you think China actually needs to go to accomplish that goal?
It's a very difficult situation that they're in because they're trying to deliver in an orderly fashion, which is always difficult to do. It is especially difficult to do in an economy that is not, especially market oriented and has tight capital controls. So it's definitely, I think, a risk for the global outlook.
How large a risk, though? What kind of ripple effect realistically do you think the U.S. could feel or Europe could feel if the fragilities in China maybe get worse?
Well, first of all, through trade, of course, but secondly, also through global financial conditions. I think both of those are important.
Sonia, great to get your perspective on things. Thank you. Sonia Meskin there of BNY Mellon Investment Management. If you are just tuning in, welcome to the programme. Tons of feedback on the Powell speech on Friday. Tons of reaction, including this from Stuart Kaiser of Citi, publishing yesterday evening. Allow me to share this quote with you. It's important. He says, the combo of solid labour markets and downtrending inflation is good for risk assets. But here's the punchline. Keep it simple until that changes. But comments today suggest that changing is the desired Fed outcome. And if you go through the content of that speech, Tom, the actual substance of it, it's the need for below-trend growth. Don't have it right now. It's the need for this labour market to ease even more. Perhaps you'll see that on Friday. But that's the objective from Chairman Powell and this Federal Reserve.
They're data dependent. They may get some data here on disinflation that suddenly it's soft landing, but I've sort of felt the idea out there was within the data dependency, unlike in Europe, there's no real aggregated slowdown in America. Again, don't tell that to the president's got a 42% approval rating. Clearly there's a slowdown going on, but not in the markets.
Do you remember that line about cumulative lags, cumulative tightening, and the lags of policy from the former Vice Chair, Lael Brainard?
Dr. Brainard wasn't there.
Powell
I wish
alluded to
Brainard
that.
was at Jackson Hole.
Powell alluded to that. He said there may be significant further drag in the pipeline. There's a debate about that, TK, to be clear.
Yeah, bolt-on acquisition here. I know a fair amount about this, John. This is pretty cool. This is what you do in academics, and John, you do it in your England. This is a University of Cambridge years ago on protein science. And this is like actually shipping protein stuff to biotechnology labs, researchers, and science. It's ABCAM, ABCAM, and they are taken out this morning by the life sciences juggernaut, Danaher. If you're a hedge fund, John, usually you want to own something in medicine, and one of the popular names is D.H.R. Danaher, I believe, of Washington, which is skewed over the last 5 years towards life sciences. And this is, to me, almost a textbook bolt-on. This teensweens, 1,700 employees.
Danaher buying Abcam, $24 a share.
Yeah.
In cash, that headline dropping just moments ago. Welcome to the programme to you all. Equity futures right now in the S&P 500 positive by 0.2%. Coming up at 8:30 Eastern time, Tom, so about 45 minutes from now, 48 minutes from now, we'll catch up with Dana Peterson of the Conference Board going into that payrolls report this Friday.
And that's a pulse of the American economy. And I think there's some raging debate here. To me, the key thing here into the end of the month is, in my opinion, the disaggregation of economic data in America. I don't think it's easy for Dana Peterson, or I thought Neela Richardson was just brilliant out at Jackson Hole, and others, and Michael Gapin, and the retiring Ethan Harris at Bank of America.
Legend.
This is really, really difficult to aggregate a fractured America.
So you start to look at really specific things. You can start with hours worked, or you can look at the diffusion of jobs gains, Tom, which is how much breadth is there, how broad are those jobs gains,
nice.
How isolated are those jobs gains. And Katie, there'll be questions we ask this coming Friday.
Yeah, absolutely. We'll be asking questions about what we're seeing in wages as well, especially as the Fed is looking not just for some slack building in the labor market, but what inflationary impulses are actually coming on the wage side. Another thing we heard consistently out of speakers at Jackson Hole is that they don't see a wage price spiral, but then you see headlines like the UAW asking for a 46% raise, and you maybe start to ask some questions.
Those headlines are important, Katie. I totally agree. Tom, you go into year end and you see headlines like that from UAW. No idea how those negotiations conclude. Let's see if it is those kind of numbers. A lot of people think they won't be, but still, we've seen big gains at UPS, big gains at American Airlines. And Tom, people take notice of those kind of things. They see them and it influences the way they think about them.
I agree with that. And the barbell of that is the real estate market, which wasn't, it's always a topic in Jackson Hole. I looked at a 4-bedroom in Jackson Hole.
How much was that? Give me the price.
No garage. It was $2.6 million.
$2.6 million.
Throw a 7-something rate on that, and
Basic
that's...
$2.6 million.
It's a ranch, 1 acre.
You're doing that cash.
We are facing major shifts. I'll mention 3 for you. One is there's a complete change in the labor market. There's a complete change in the energy future that we are facing. And there is a complete shift in how geopolitical forces organize our economies.
Labour, energy and geopolitics are deeply thoughtful. Christine Lagarde, ECB President, catching up with Tom Keene in Jackson Hole on Friday.
I'm sorry, you wouldn't believe the snark she gets out on Twitter. I mean, boy,
Tons of it,
huge
yeah.
spot of it. They love to go after her. I think she's lovely. She's really unpretentious. She's out there. She's doing the social media, the fandom, the selfies, all of it. She's like a rock star, but she has time. That when Outlaws Tracy Alloway walks by, Lagarde goes, Tracy, I love your cowboy boots.
Oh, that happened.
That happened.
Jackson Hole is kind of bizarre, isn't it?
Yeah.
The people you see bump into.
I mean, Tracy looks
I had breakfast with my good friend, the South African Central Bank governor.
He's wonderful.
Nice, he's fantastic.
Yeah.
One of my favourites.
Yeah.
He's lovely too.
Yeah.
He's lovely as well. Okay,
But
is that
these
enough
little-
love for central bankers?
Oh, there's like these little. I mean, Neil Kashkari shows up with various, children in tow. They were well mannered.
I didn't see that.
Yeah, they
Neil
were
to the kids.
well-mannered.
Very cool. Tom, one frustration that I have with the central bankers, just the way we spoke to the EM central bankers, the South African Central Bank governor, the question you need to ask those guys right now is what can the Federal Reserve and the ECB and everybody else learn from you? And we touched on that a little bit on Friday, and I think it's a really important question. They smell inflation, they smell it from a mile away, and they act. And they act fast and decisively. And Tom, to some extent, I know we've moved on a little bit, but we still need to look back at the mistakes that were made at the Federal Reserve and elsewhere.
Oh, yeah, and they were down back to emerging markets. Damian Sassar has been great on this. I'm sorry, I see depreciation and devaluation. My first question to the gentleman from South Africa was, what do you do when you get South African Rand at 20? South African Rand, John, is weakened from 14 to 19. I believe that's 5 divided by 14. It's too early in the morning to do that percentage.
Dollar
It's
Rand.
big.
Yeah, that's
Dollar Rand.
probably not what they want when they've got an inflation issue. But that inflation issue's got better.
Yeah, we'll have to see. Good morning to all of you. Kaylee Lines is in for not Tracy Alloway, for Lisa Abramowitz. I hear. Are you here for today or the week or
Through Thursday?
Through Thursday. Very good. And we are
Tom Solo Friday, going into the long weekend stateside. Fun, Tom. It's payrolls.
Yeah.
It's a good day.
How fun!
It's a good day to be at
You're
work.
going to be in flip flops, on some.
I don't
beach
do
somewhere.
flip flops. Not really my thing. Not really.
Saving the show right now with Eurasia Group.
We can
And this
discuss
is
that
off
if you
of
want, no?
Ian Bremmer's spectacular AI article in Foreign Affairs magazine with China and their corporate affairs at Eurasia Group. Anna Ashton joins us this morning. Anna, what do you think of the Chinese coverage? It's a cottage industry right now for people like you. There's like 5 articles a day I feel like I have to read. What am I missing? What do you see in your China analysis that's not in the zeitgeist right now?
So, I wish there were only 5 articles a day that I had to read. Because it definitely has become something of a cottage industry. I think that the interesting thing that's happening right now really is this détente that the Biden administration and Chinese leadership have been pursuing for the entirety of the summer. And I know that that's not new, and it is something that people have had every reason to see. But I think, the fact that it's being carried out by the Biden administration at this time, when we're headed into a presidential election year. And I really had expected a couple of years ago that by now there would be nothing but competition to be the most hawkish on China. It's very interesting to see the Biden administration deciding that stability is the course it wants to chart.
Anna, this week, key for Secretary Raimondo. What would you expect from 4 days of meetings from the Commerce Secretary?
I think that this is the most important visit we've had so far from a member of the administration because she oversees export controls, and export controls are the things, among others, but a mainstay of the tech policies that the United States has rolled out in recent years that China is most bothered by. Feels that this is an effort to contain their technological advancement and even likely to undermine their economic prosperity. So they're pretty upset about the export controls and about things like the executive order on outbound investment that also constrains U.S. abilities to invest in certain sectors in China, including AI, quantum, and semiconductor chips. And now they're getting to speak with the woman who is overseeing all of that. She's already said on the ground that national security concerns are non-negotiable, but she's emphasized that that's just 1% of the U.S. economy. And she's really pushed for a more robust and more stable commercial relationship. And she's gotten some receptivity from her counterparts.
Yeah, we've heard that they're going to be talking. There's going to be an export group meeting tomorrow on August 29th. To your point, Anna, we've heard from her and continuously from administration officials that this is about protecting national security interests. It is not about holding China back economically. But can you really have one without the other? Isn't protecting national security interests to at least a certain degree going to hit China economically by default?
Yes, by default, it absolutely will, Kayleigh. And, the reality is that these export controls, starting last October with the ones that Jake Sullivan announced, they're really quite restrictive. They don't just prevent China from buying things that are state of the art. They prevent China from buying anything in the future that is smaller than what these restrictions have set down, and smaller being more state of the art. So they're kind of trying to hold China at a certain place in its technological development.
And all of this is about fancy technology stuff. But the fact is, in my house still, like 80% of the garbage that comes in the door in cardboard boxes says made in China. Has there been any lessening of all the stuff we buy that's made in China that's not going to be in a balloon over Wyoming?
This is an interesting question because of the recent numbers. So the numbers for all of 2022 showed that trade was at an all-time high, over $700 billion. But recent numbers have indicated that exports from China into the United States specifically have dropped by 25% so far this year. The biggest drop in a very long time.
But what was that? I don't mean to interrupt, but this is important, Anna. What was the drop due to? Was it electric vehicles from China, or was it, the coasters? We just had to get coasters, John, for the deck. The gin and tonic was slipping off the coaster.
Where are we going with this?
Anna, what caused that drop in Chinese exports to America?
So there's lots of speculation about that, but I think that it really is likely that it is a sign of U.S. companies beginning to diversify their supply chains. And so more of the inputs for the goods that they are bringing into the United States are made in places other than China. That doesn't mean that they're leaving China. It just means that for the business that involves manufacturing to export to the United States, more and more of them are doing that elsewhere.
So, Anna, is it going through India, Vietnam? Where were you seeing that show up?
A combination of those and other places. But, the reality is that there are no markets that can just absorb all of the export or all of the manufacturing that is done in China for the U.S. market. So at a certain point, probably in the near future, these other markets are going to hit capacity. And then it'll be much more difficult and more expensive for companies to figure out where to go.
And out of interest, who do you think has got the best strategy in how to handle that, to move your manufacturing base out of China without isolating the Chinese consumer?
Well, I'm gonna avoid naming any companies,
Sure.
But I think the strategies that are really focused on in China for China, and ramping up the manufacturing and development that's going on for the Chinese market are good strategies. They don't check every box for the Chinese government or in terms of risk management, but they check the most boxes.
What a change. Anna Ashton of Eurasia Group. Anna, thank you. Just a monster change, Tom. In China for China. In China for China, and then maybe a base elsewhere for the rest of the world.
It has to do around Jackson Hole, where we read a lot of international relations think tank stuff. I know, John, you're doing the same thing. But what you address there with her is exactly the point, the touch point for every single article. So they make something in Vietnam, and some of it is basically made in China. They put a label on it, made in Vietnam, and shift it to us. Some of it is stuff from China actually manufactured in Vietnam, and then they ship it to us. And there's a real ambiguity that's really gray, amorphous.
That was on the edge of serious. Do you want to tell us more about those coasters?
No,
Did you get any?
You can't have coasters with fancy crystal that slip. It's like dangerous.
Got it. You need something
Vet
sticky
Bill
at the
gets
bottom.
up and wants to know the
course.
line.
Wants to have some of the gin and tonic.
Yeah.
We are prepared to raise rates further if appropriate and intend to hold policy at a restrictive level.
With the exception of the inflation target, which he said is 2% and will remain 2%, everything else is uncertain.
At this point, we really need to see inflation moving down. And we're seeing early signs of that.
Who knows what GDP is in real time? Follow the labor market.
The fragmentation is something that is much talked about, but that we are now beginning to see.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowitz, and Tom Keene on radio, on television. Monday of a slow, boring August week. No, it's going to be a most interesting week, starting with the fact Bramo is off. Unsure where she is. Somewhere in a latitude north of 55 degrees, I think. Joining us from Washington, Kaylee Lines joins us this morning, and we are thrilled. Good to have you here. Through Thursday.
It's nice to be here.
And, you'll be here through Thursday, and that's a good.
Say it and mean it, Kaylee. Say it and mean it.
No, did that not sound like I said it with conviction? I'm very happy to see you guys.
She's very happy.
Yeah, very happy. We're happy. I'm happy. Bramo's happy. Anyways, John, what Lagarde said there in the opening comments about fragmentation, that was the zeitgeist to have on Friday Georgieva of the IMF, Lagarde of the ECB, and both of them talking about fragmentation. How about the fragmentation of the market to begin with?
And to hear from Chairman Powell as well. The reviews of that speech from the Federal Reserve Chairman, all kinds of words, balanced. The word from Renaissance Macro. Tom, neutral.
Neutral.
Balanced, patience, no surprises, Mike Ferroli over at JP Morgan. When you go through the body of that speech, there is something for absolutely everybody.
Yeah.
If you want a hawkish Federal Reserve, how about this line on economic growth? Above-trend growth could warrant further tightening of monetary policy. On the labour market, evidence that the tightness in the labour market is no longer easing could also call for a monetary policy response. Just a touch, a sprinkle of hawkishness there. Tom, in the conclusion, though, that patience, that balance, that neutral posture
he went
comes to the surface.
Conclusion.
Absolutely. Navigating stars under cloudy skies, the risk management position of maybe going more slowly, just alluding to all of that, Tom, in that speech.
And there it was. And to me, it was a lot of central bankers and fancy people in Jackson Hole trying to deal with an America that perceives it's flat on their back. Kayla, you fly in, and on the short taxiway to the 5-gate Jackson Hole Airport at JAC, you go by not 70, but I'll say 25, 30, 40 Gulfstreams. And the private elite got the planes lined up like at Davos, not at attending the meeting. This is just the prosperity of Jackson Hole as well. And it really goes to the two Americas that are out there.
Yeah, absolutely. When you have that kind of wealth on the one hand, and on the other hand, you have, while we have seen inflation going down, still the average American feeling it in their wallets. Prices may not be going up at the same pace, but that still means they are going higher. They certainly aren't coming down. You're seeing a reacceleration in prices at the pump. All of that pinches the U.S. consumer. And while we're still seeing resilience in the economic data, it becomes a question of when more deterioration perhaps will kick in.
And John, I take real issue with the inflation economics guys that are looking month to month, quarter to quarter, including the important data this week. I learned a lot at the Pioneer Grill with Joe Weisenthal and Tracy Alloway. Did you see their entourage of digital people that travels with them?
I know.
It's like 7 people.
They've got more producers than us.
Producers.
For the Odd Lots podcast.
I
noticed that. I noticed that.
And
they're very well dressed too. They go around in suits and stuff. It's quite official.
With the John Farrow look.
I wasn't in the John Farrow look on my day off.
He was very cash.
Whatever that look is meant to be.
It's a hell of an endorsement from Montclair. And John, I look at the inflation at the Pioneer Grill, and that's what America's feeling. They don't care about this economic mumbo jumbo. They're looking at chip beef on toast up $3 at the Pioneer Grill.
I was told I looked like a preacher in my sweater over my shirt. I look like a priest, apparently, on Friday. Won't be doing that again. Tom, there seems to be a difference between what companies are saying. Think the US retailers over the last couple of weeks, Walmart, Target, Dollar General, Dick's Sporting Goods, Foot Locker, and what we're seeing in the hard data. What was interesting to me to hear from Patrick Harker at the Philadelphia Fed go through why he thinks we should pause here and point again and again and again to anecdotal evidence what companies are telling him in his district.
Right.
I think that's so crucial, Tom, as they go into the FOMC next month. How many Fed presidents do the same thing?
And each district is different. Kansas City has a completely different agrarian history compared to Harker's Philadelphia, which is lots of mid-sized business, not small businesses like, 10, 20 employees, but, 2,000, 3,000, 5,000 employees. That's the heart of the Pennsylvania, New Jersey district.
You could sense a worry, Tom, from those businesses, according to him, that this Fed maybe's gone too far.
Right.
That they're already at a level that is restrictive. And again, I'm going to be interested to see how that debate actually unfolds. The difference between Fed presidents who might start pushing back in certain districts like the Philadelphia Fed and what's happening on the Board of Governors down in Washington.
Kayleigh, what do you see in Washington, the politics here? Is Powell a political debate, or is that it moved on beyond that?
Oh, he absolutely is. The chairman has been political, I would argue, for his entire term. But you're starting to hear the conversation more about his future. As we're in the middle of a 2024 election cycle, you have a number of potential Republican nominees, those competing for the Republican ticket. Mike Pence, Donald Trump, others suggesting they would not reappoint this chairman. To use the former president Donald Trump's words, he's been too late, is what he said. That's the accusation on multiple occasions.
That's a guy with a transitory golf game.
When he said that to Tucker Carlson, I did sit there and think, is he talking about meetings? As in, does he turn up to meetings with the president? I didn't know where that was going.
Oh, John.
I know what he meant once he completed the sentence, of course.
Very quickly on the data, John, 15.99 shows a resilient equity market this end of August.
Equities near session highs, up by a third of 1%, a little more than a quarter of 1% on the S&P 500. Yields come in at the long end down about a basis point or so to 422. At the front end, still elevated by a single basis point, just shy of cycle highs, Tom, on a 2-year yield.
Coming into O'Hare on Air Scott Kirby here. We're going over Michigan, and you look down and you tear up. It's Wrigley Field, and it's like the Cubby land and all that. I said, book somebody from Chicago. Katie Nixon joins us now, CIO at Northern Trust Wealth Management. Great seats for the Cubbies, just north of the $1 million, the Golden Mile, whatever they call it out there. Katie, how golden is the American economy right now? Do you really buy economic slowdown?
Hi, Tom. Thanks for having me this morning. I think as Chair Powell said, we're growing above trend. We're certainly seeing surprising resilience in many, many areas. And, that resilience may continue. And I think that was part of the cloudy skies comment that Powell made. The ability to really accurately forecast going forward has been really impeded by some of the particular nuances of this post-COVID recovery. But as many of your guests have noted, it's all going to come down to labor and the labor markets. And there we also continue to see just abnormal strength given the amount of monetary policy tightening that we've seen. So we'll absolutely see on Friday what happens, but we continue to see strong and tight jobs markets.
Okay, so we're seeing strength, we're seeing resilience, as you say, despite the incredible pace of tightening that we have already seen, Katie. And that is what is contributing to this higher for longer narrative that theoretically, there's not going to be any reason to bring rates down from the high level at which they sit now if you aren't actually seeing them transmit into the economy. How do you position for a higher for longer world?
Well, Kayleigh, thanks for the question. And I think we're there. We certainly see high rates across the curve. We've seen a dramatic re-rating in the long end of the curve in the last couple of weeks, acknowledging two things. Firstly, that the economy is not going into a recession, so the soft landing, no landing scenario has really taken hold. But then, as you note, it's the for longer part of the monetary policy that I think more and more investors have gotten on board with. So I think we're already there in terms of seeing how high rates can go. We see positive real rates across the curve right now. And that's also something that Powell mentioned and noted in his speech. So we think that the economy is strong, rates are going to stay high, and that's certainly going to be good for bond investors.
We're far along in the adjustment process, maybe in the bond market, and that's what you cited, Katie. But can you say the same thing about the stock market?
John, again, good question. So here's the problem. There are sort of many dimensions to the headwinds for equities right now, for U.S. equities in particular. One we've talked about, and that is the monetary policy higher for longer mantra. Higher, longer term rates are going to be a headwind to valuations, and valuations are already very high, stretched relative to historical norms and averages. The second thing is inflation, which is going to be persistently higher, which is why the Fed's going to remain higher. And inflation has been something that's been a friend to corporations over the last couple of years, as they've been able to really easily pass those price increases on to consumers. And as growth has been, nominal growth has been really strong, we're seeing now more of a difficulty in passing those prices on. The last thing I'll say is, it's a global economy. Stocks are global. And we are seeing a slowdown outside the U.S., China and Europe in particular.
Hey, Katie, the Northern Trust Company is as venerable and cautious and measured as there can be. What are you hearing from your clients? High net worth people. I'm going to suggest they've participated for the good the last decade. Do they have an enthusiasm out 3 years? Dare I say out 5 years?
Tom, thank you for the compliments about Northern Trust, and I couldn't agree more. And one of the great things about Northern is that we work with our clients as investors, but many of them are business owners. And so I think because of their front row seat in the economy, I think there's a natural, caution right now. Everybody's waiting for those long and variable legs to take hold and to pull down economic growth. And you marry that with equity markets that have been incredibly buoyant this year. And I would suggest that most of our clients are just cautious right now. And the other side of that is they can get very high returns in cash, short, and even longer duration fixed income now. So we're seeing a rebalancing in portfolios away from risk and more towards locking in goals, locking in funding of goals with these high short-term interest rates. 5%
on a 2-year. Katie Nixon, thank you, of Northern Trust Wealth Management. 5.1%, just short of that at the moment. 5.08%. Yields higher by about a half a basis point on a 2-year. On a 10-year, Tom, down about 2 basis points. Let's call this 422 on a 10-year maturity.
It's great to talk to her. Talk about Chicago. We don't go out there enough, John. I think I hate to drive in from O'Hare downtown.
What's bad about it?
It's like Narita. It takes forever. It's never pleasant.
Like JFK into Manhattan.
We got to get a helicopter, but we need to bring the show out there. I had family way back that was venerable there and all that. They'd go to Daly's restaurant, the whole steak thing.
Does that make them fancy?
It makes them fancy. Yeah, they're like fancy people from there. And it was just great to talk to Katie. And we forget about the place of Chicago in our financial history.
We can head over to Chicago.
Yeah,
I just got back from Jacksonville.
Catch up with the Chicago Fed
president.
president.
We're leaving. We're busy.
Katie, the whole point of this program sometimes is just to establish where we're going next.
Yeah, London.
Just set out the thought. London, September. Yeah. Tom often features this around a bar that he might want to go to or a football match in our future.
Well, the problem is, John, the bar that I go to, everyone is an Arsenal fan.
North London Derby, September.
I know.
That happen.
But, Nick and the team at the Langford Cigar Bar, they're all Arsenal all the time.
Get Nick to sort out tickets.
I am.
If you're just tuning in, welcome. Please stick with us. Equity futures on the S&P 500 positive by 0.3%. I feel like that's an everyday occurrence, Tom. Please stick with us. I'm so sorry.
Please stick with us.
I'm so sorry.
Okay, let's go to this. Harry Kane, 2 goals at Bayern. It's starting strong
He's getting it done, isn't he?
Got a penalty
it's great
shot.
To see.
Even did a great video. I'd really never heard the guy talk because the Tots kept him so removed for whatever reason. And he's like making an effort at Bayern to say, hey, I'm here.
Sometimes, Tom, when you're the man, there's a burden that comes with that. There's a lot of pressure. I get the sense, just seeing from him play over at Bayern, that he's just playing a little bit more freely.
Is that how you say it?
There's less pressure on him.
Yeah. Are the Tots winning too? Are they playing better because they don't have Mr. Kane?
I don't know. It's such early days. I wouldn't go that far. Yeah. I don't know. But they look good. I watched a little bit of them over the weekend. James Maddison looks like a great signing.
I saw him, Tots. He was with Leicester, however you pronounce it.
Leicester, yeah, that's the one.
And he's pretty good.
He's decent.
He really controls it. What's Son going to do? The Korean, the spectacular. Has he found a place yet without Harry?
Every time they show the highlight reel of the Premier League and that Son goal is in there, where he opens up his body and drills one into the top right corner.
Right.
I think of you because I know that you were right behind.
We were right there.
Goal. You were
I missed the goal. I was having my meat pie.
With a
I was eating it wrong with a knife and fork.
With a knife and fork. And I was so disappointed.
A guy came up to me and said,
Farrell would eat a football game with a knife and fork.
A guy came up to me. He says, oh my God, you're here. Farrell wouldn't eat the damn pie like that.
No way.
Yeah.
With your hands, Tom.
Oh, I had a knife and
With your hands.
We have to get inflation down to 2%. We all agree on that. We're all committed to that. The question is how to get there. We are at a restrictive stance in my view, and we're putting pressure on the economy to slow inflation. The question is whether we need to increase the pressure or just keep pushing. And I'm in the camp right now, just keep the pressure going, let this work through.
Patrick Harker there, the Philadelphia Fed president, on the effort over at the Federal Reserve and endorsing, to some degree, a pause at the September meeting. Much more on the Federal Reserve still to come going into payrolls on Friday. The estimate at the moment, 168,000. That progress this Fed is looking to make, they want smaller and smaller numbers in the job market to take some pressure off the inflation story. In the equity market at the moment, we're elevated and near session highs on the S&P 500, up by 1/3%. Yields are lower by a single basis point. Let's call it a single basis point on a 10-year to 4.2256. And at the 2-year level, at the 2-year maturity, yields up by a single basis point. The 2-year right now, 5.09%, Tom, in the Treasury market.
I don't think we talk enough about Patrick Harker. This is the former head of Wharton, the dean of Wharton. This is a guy that ran the University of Delaware, Liz Ann Saunders' alma mater, and I believe a guy named Biden. And what's important here is this guy is an operative and thinking engineer. He really understands manufacturing processes, arguably more than any other Fed official we have.
And you know what? He's also really, really nice.
Yeah.
Can I just say that?
He's a real worker. He's not a PhD kind of academic
Total
guy.
gentleman.
Yeah.
Total gent. Great to catch
We
up
talked
with him.
about Williamsport, Pennsylvania, and Little League, that we should do a remote there, surveillance remote.
Remote.
That's God's Central Earth, where you go to Williamsport, Pennsylvania.
We can set the tour for the election year, Tom.
Yeah, Ira Jersey can come.
Make that happen.
Let's do that right now. We're going to dive into the bond market here the end of August, an important August week, not a lazy end of summer week at all. We can do this with Ira Jersey, Chief U.S. Interest Rate Strategist at Bloomberg Intelligence. Ira, if we get a yield breakout higher, price down, yield up, 3-month T-bill, I mean, even the old LIBOR OIS, the 10-year yield, the real yield goes back through 2%. What are the ramifications of a price down, yield up move?
Well, I think the way that you get to that really matters. So if we wind up with a bear market more than we've recently had, I think that just shows that the market's thinking that the Fed's going to not make a policy mistake, right? So the big risk now, I think, is that the market starts to price for a Federal Reserve that ultimately hikes another time, maybe even 2. We're not priced for that at all yet, but if you wind up with an environment where you get 170,000 jobs a month for a long period of time, the market will be thinking that the Fed eventually is going to make a policy mistake. We have an important test. I think Mr. Jonathan mentioned just a second ago how busy this week's going to be. At 11:30 today, we have a 2-year auction, and with 2 years above 5% again, up toward 5.10, which is fair value if you think the Fed's going to hike once and then hold for all of 2024. That'll be really interesting to see if we have decent demand at that auction later this morning.
Bramo's away, so we have to have auction chat with Jersey. I don't know what that's about. Ira, let's go back to Jersey 101. Out the curve, where does the Fed influence rates? They obviously influence 3-month T-bill, 2-year, but how far out do they really influence a curve?
Well, they influence all of it, but insofar as how they influence expectations, right? So the 2-year yield is going to be very sensitive to where the Fed funds rate is now, where it's going over the next year or two. Obviously, it should be basically the average of where Fed funds is going to be over the next 2 years. Farther out the curve, it's really, do they set expectations in such a way that that yields are going to be lower because the market thinks that the Fed's going to be cutting. So one of the reasons you've seen this reasonably substantial backup in 5-year yields and 10-year yields, so that belly of the curve is what we like to call it, is largely because we're pricing out interest rate cuts that were priced in earlier in the year, right? So we were pricing at one point for 5 interest rate cuts in 2024. Now we're pricing barely for 2. So you wind up with a situation where the market thinks that interest rates short-term interest rates are going to remain higher for longer, and because of that, you wind up with some people are calling it a bear steepening. It's really a bear uninversion, but the yield curve is still inverted, right? You still have 5% 2-year yields and just a little over 4% 10-year yields. So you're not talking about a curve that's steep at all. It's still inverted very significantly.
While we're at it, the rest of the supply, Tom, I'll go through the auction slate. 2-year notes, 5-year notes, 7-year notes tomorrow. $36 billion worth of 7-year notes tomorrow. Ira, can I do the boring stuff? Maybe the juvenile stuff. Can we talk about September the 20th? Ira, just how high is that bar? for a hike at the Federal Reserve. We've got a payrolls print on Friday and a CPI report on the 13th of September. How high is that bar?
Yeah, I think it's reasonably high for September, given that they did move in last month. So, yeah, I think that they're on a path to try to go every other month at this point. A pretty smart investor that I talked to said, they were hiking at 75s and then 50s and 25, and now they're hiking in 12.5 basis point increments. And so another 25 basis points in November is not out of the question. But I think that September pause is kind of the base case scenario, unless we wind up getting something absolutely crazy in the data that doesn't seem very likely at this point.
Well, and Ira, we have all been focused so much on will they, won't they hike in September, November, whatever it may be, where ultimately Fed funds is going higher for longer. What about the balance sheet? How should we be thinking about the runoff and its implications at this point?
Yeah, so the runoff is kind of on, what President Harker would say is, like watching paint dry. It's happening and it's already priced into the market. We wound up repricing a lot of the quantitative tightening that we were going to get when it was first considered. I think importantly, and we actually have a note out on the Bloomberg terminal this morning about this, is that the Fed is going to have to stop quantitative tightening at some point for very technical reasons. And basically it's that banks need a certain amount of reserves to comply with a lot of the Basel capital regulations. And we estimate that that's around $2.5 trillion. So at some time during the first half of next year, reserves are likely to hit that point where the Fed is going to have to stop quantitative tightening. Now, will it increase their balance sheet? Not necessarily, but it just has to stop running off the balance sheet. And we think that that will happen even before the Fed starts to cut, more for technical reasons as opposed to anything that's related to monetary policy.
And Ira, when do you think the Fed starts to cut?
Yeah, so our view is not until the fourth quarter of 2024, primarily because we think that things will be good enough and that the Fed isn't going to feel compelled to cut very early because you need two factors. One, you need inflation to be near their target. And two, you need to start to see job losses, and we're very far from that right now. Just look at last week's jobless claims numbers; they were fine. And so until you wind up with a period of job losses, not just 1 month, but several months of job losses, the Fed's not even going to consider cutting.
Ira, the important question: were you there Saturday night?
I was actually on a holiday with my daughter, so I wasn't there Saturday night. I did watch part of it. Lionel Messi is really good. Yeah, Lionel Messi
the Inter Miami tour.
He came up from Miami.
The road show came to New York, or New Jersey to be more specific, right?
To both of you quickly, I don't want to take away time. Is he like in his prime, past his prime? Ira, is he? How do you judge this Messi of America?
Well, skill-wise, he's as good as he's ever been. I think it's more of, how he's not going to go 90 minutes every game anymore just because of his age. But, when he's on the field and he's fresh and not injured, he's as good or better than he's ever been.
How could the Tots not pick him up? I just don't get it.
I'm not sure they had the financial backing to attract that kind of move, Tom. It's that time of year where we complain about the price of sporting events. The US Open starts a little bit later. Ira, thank you. Ira Jersey. The price of Ira's vacation, the same price as the ticket on Saturday evening to watch Lionel Messi.
And you bring it over to TV, Paul Sweeney's world. I'll be with Paul on radio here in a bit. And the whole pricing of sports, I don't get. I just don't get it.
Can you imagine World Cup 2026 in the United States? How much those tickets might cost if you don't get them through official channels.
Am I correct that Formula One in Las Vegas coming up is a different pricing than at Monza in Italy?
Yeah.
They're not like equal.
The US sporting events cost an absolute fortune.
Right. David Rosenberg in Toronto publishing moments ago, John, with a bullish bond bias. That to me is the great mystery call out 90 days.
We'll pick up on that note, Tom.
Price up, yield
Megan
down.
Swiber, Bank of America. Thanks for that. Matt Miskin, John Hancock, and Dan Skelly of Morgan Stanley. All of that still to come in the next hour on Bloomberg TV, live from New York City. This is Bloomberg.
Good morning. morning, everyone. Bloomberg Surveillance. Kaylee Lyons in for Lisa Abramowitz. Mr. Farrell preparing for the next hour of the open and all that. We'll open here. And what I really want to convey right now is this is not a sleepy August week. There's a ton of economic data. It's an early jobs day coming up to. Kaylee, on Friday, I pulled a short straw. Abramo off, Farrell off. I'm working. McKee, are you working on Friday?
There's nothing happening Friday.
There's nothing happening Friday. We got a jobs day on Friday.
You know what's weird is that it is not an early close in the markets for a 3-day holiday weekend, and all the bond traders are kind of upset about that.
Yeah.
Because it's jobs day?
Because it's jobs day.
We hope, Kaylee, it's going to be interesting to see what we see out here, but I think it will change the political dialogue, the sum total of what we see of the spirit of America, off ADP, off claims, and what we see off jobs day.
Yeah, especially as this is a president who has touted all of the job gains, millions of them he has seen since coming into office. Of course, we were emerging from the pandemic, so that is a contributing factor, but also the unemployment rate at 3.5%, the lowest it's been in decades. That is something this administration has continually tried to tout, but isn't necessarily showing up in economic approval ratings for it.
Across the span of Bloomberg News over the many decades, there are people that have given us leadership. We don't spend enough time on this. His people said to Bloomberg, I need a fancy title. So he's our international economics and blah, blah, blah correspondent. But what Michael McKee is our foundational voice in print and now in media, in radio and television on economics. And he truly led our coverage at Jackson Hole this week. I guess Lagarde was a highlight. There was this highlight, the papers, I thought Barry Eichengreen. It was great. But the real highlight, folks, and for those of you on radio, I can only describe McKee getting me on a saddle. No, not out on some trail, but Michael McKee getting me into the $1 million Cowboy Bar in Jackson Hole. It was a snapshot. A guy from J.P. Morgan came up to me, a bunch of people that watch us in Missouri, and, all that, Michael McKee. The vibrancy of that economy speaks to a split America.
Well, it's a tourist place where, and tourism has grown tremendously, and a lot of Americans have been traveling domestically because it's expensive to go overseas. So it is very crowded these days, and it's hard to get into the $1 Million Cowboy Bar. I'm sure that you got past the velvet rope because you're a celebrity.
No,
Did you get in because of your cowboy hat?
Yeah, exactly.
No, I went to the Gun Barrel Steakhouse, which is legendary there. And, people actually showed up there to meet us. They're so fascinated by what we do every day. And, you should have seen all the stuffed animals and all that.
I should have seen. I wasn't invited this year.
You get your drink and it's got this, like a Winchester stir stick or whatever. What did you learn from this? Not the buoyancy of Jackson Hole, but the grind of all these seminars that you've seen. What was distinctive this time?
I think the takeaway is that right now is a very uncertain period, and because they get asked about it, various Fed officials and ECB officials, a lot of ECB officials there, they are telling people what they think right now, but also cautioning everybody, we don't know that's the way we're going to vote because we don't know what the data are going to tell us. And so the short-term takeaway is that it's hard to know exactly what to do now. And the medium term to longer was interesting. That was the theme of the conference, that there's going to be a lot of changes in the economic world over the next decade. And it'll make it more difficult in some ways for central bankers, but it's going to be different. We're going to have it'll be when Kaylee is our age. The issues are going to be quite different than they are now. Trade is changing, and housing is changing, and so much.
When Kaylee's our age, the glaciers will have finally pulled back. Kaylee, pick it up.
Okay, well, looking at not so much the longer term, just in the course of the next week. You said the data is going to be important. We get JOLTS, PCE, jobs on Friday. How instructive is it going to be for a Federal Reserve that is trying to make a decision in just a couple weeks as to whether or not it is going to leave rates on hold or hike again?
Well, PCE is going to be very important because that's the number that they follow, and even though they target the headline rate, they are following the core rate. So we will be watching to see what the monthly change in the core rate of PCE is, because at this point, you're going to have base effects in the year-over-year numbers, but do we see the core rate go down on a month-over-month basis? That's what they're looking for, and that'd probably be more important than jobs. Jobs is going to be a confirming piece of data that if it slows down as expected, that they're on the right track.
Very quickly, I want to get to this, but this is a vignette. There's this bear, folks. It's like 12 feet tall. It's like frightening how big this bear is. And you go through these wooden doors and only Michael McKee can go. They won't let me into the room. Saturday, what a vignette. Barry Eichengreen on debt and our high debt. And the discussant was the wonderful Carmen Reinhart, and you were in that room. Just give us a window into what the room's like when you've got a giant of international economics like Eichengreen, and with all her work at the World Bank, et cetera, Carmen Reinhart as well.
Oh, it's fascinating because you have an audience of giants in the economic world, academics, central bankers, and so I mean, if it were me, I'd be nervous to present to all those people. Did Carmen start yelling?
Carmen
did not start yelling. She generally agreed with Barry. But that was the most interesting paper in the sense that Eichengreen presented the idea that growing debt is going to be impossible to sustain, but there is absolutely nothing that will be done about it because the political will isn't there. And man, the people in the audience were so disappointed. There was one person who said, I'm going to have to watch TV comedies all weekend to get over this.
Well, that's the caution of Eichengreen, and when he talks, people listen, as he did with us here on Friday. Michael McKee leading our coverage at Jackson Hole. I segued from that because I wanted to talk about debt right now with Dana Peterson, chief economist at Conference Board. The Conference Board hugely aware of the consumer and the business tone that's out there in America. Along that line, and to take it from the academics, Dana, are we over-debted right now? Are we up to our eyeballs in credit debt?
Absolutely. Certainly when we look at the consumer, credit debt has risen to where we were pre-pandemic. Delinquencies are up. When we look at the sovereign debt in the U.S., it's extremely elevated. Interest rates are rising, and that's causing debt service to rise as well. And we're concerned about both the sovereign situation as well as consumers heading into a season when they're going to run out of excess savings and also may be laden with student debt loan repayments.
Well, to that exact point, Dana, we've been talking a lot about the month of September. I am interested in October, when those payments resume after years of being on pause due to the pandemic. What economic impact is that likely to have, given how this could be a very large factor in household budgets?
Well, it's probably going to take several tenths off of GDP growth in October, and it's going to weigh on the outlook going forward, because certainly if people were using credit cards to finance their debt and they were also taking that reprieve from student loan payments, when all those things come due, they're not going to spend, and they're probably going to start fearing for the economy in general because their own personal finances will not be as robust as they were.
Are we starting to see consumer behavior change already in anticipation of that? Dana, what evidence might you be seeing of that?
Well, not really. We think consumers are still looking at the fact that many of them are still working. They're still spending on services, even though they're saying that the types of services they're going to spend on will be more towards needs rather than wants. But the point is that they still anticipate that they're going to be spending, and they're not really looking forward to the fact that, yes, they're going to have higher debts. Their balance sheets are not going to be as healthy. And certainly interest rates are going to be very elevated in case they have any emergencies where they might need to finance something. So I think consumers are not really focused that much on the future as much as they should be.
Dana, you're expert at this. The theme at Jackson Hole, and particularly our day with Managing Director Georgieva of the IMF and with Lagarde of the ECB, they both brought up fragmentation. How fragmented is America right now? How disaggregated are we in our economics?
Well, I mean, you do have very different responses to what's going on in the economy. Even when we look at our own consumer confidence measure, you get different readings by age and by income. And so we do think there is quite a bit of fragmentation in the economy right now.
Well, the fragmentation that's there, I guess we see it in a jobs report on Friday. A lot of people are waiting for, I'll say, sub 100,000 non-farm payrolls. How disaggregated is that number? I mean, it's 150 million for conversation, but is part of that 150 million flat on their back and the other part confident?
Well, I think it really depends on what industry you're in. Certainly the industries where you have to show up to work are still hiring, but the industries that were former pandemic darlings like tech and finance, even transportation and warehousing, they're seeing job losses and weakness. And even with the big revisions that we saw in the payrolls data dating back from March to 12 months prior, we saw that that there were entire gains wiped out. And so if you're in those sectors, you're probably not as ebullient as if you are in, say, hotels or restaurants or even healthcare, where there's still quite a bit of hiring going on.
And finally, Dana, can I ask you about the housing market and the mortgage rates that people are facing if they're trying to buy a home or contending with it? They're thinking about selling the home that they're in, that they have a lower rate on. How is that a factor in the perception of the economic health of the country that consumers feel? If they're looking at home affordability that is the worst it's been in decades, rents that also are incredibly high.
Well, it's interesting. You actually see bifurcation in the housing market. Existing home sales are down in the dumps and prices are falling year on year because mortgage rates are so high. Why would you move if you're going to have a higher mortgage rate than what you have now after you probably refinanced a couple of times during the pandemic? But then with new housing, we're starting to see a little bit of a pickup because you can't get an existing home. But all in all, affordability is certainly down because interest rates are so high. And also in certain markets, prices are still rising year on year because this is very much about location.
Dana, thank you so much. Dana Peterson, the conference board, with us this morning. Kayleigh Lyons and Tom Keene with you here on Bloomberg Radio, Bloomberg Television. We're staggering into the week as well. I want you to dovetail your Washington view here. You planted up here. You're now planted down in Washington. My basic take is the history is Washington's sleepy in the summer, and I just don't get that this year.
No. I was told August would be a chill month, Tom. That was what I was promised when I moved down to D.C. Yeah. What I got instead was multiple indictments of a former president.
Right.
Natural disasters that the president has had to make trips to go visit, a lot of conversation about a number of policy matters, including potentially a government shutdown that could be on the horizon this fall. It has been anything but sleepy, and a lot of it is informed by the economic reality that the American people are facing right now. That's factoring into electoral politics when it comes into the 2024 race, and for the Biden administration, of course, as well, out on the road touting Bidenomics.
We're informed by Green on the Screen. Futures up 20, a nice lift off of that solid Friday lift. Dow up, futures up, additional 165. The VIX under 16 is my lead equity number, 15.83. SPX up 0.5% this morning. To all of you, we welcome again here as we start the week out on a Monday. It's a little tentative. Right now, what it is back to school, and we are thrilled that Kayleigh Lyons is with us as well. Kayleigh, I want to talk to you about a huge deal for parents, and that is the kids they have. You were an acclaimed dancer in school at UVA as well. All sorts of national cred here is well. How do you do dance in college? How do you actually pull that off?
The important conversations for a Monday morning.
It's brutal. I mean, isn't it? The physical part of it is like a sport.
Yeah, maybe not as demanding as NCAA athletics, but certainly. And I'm not in as great shape now as I was then.
No, but, you're doing it, and you're acclaimed in that. And I think of all the parents out there doing this with kids, boys and girls, right now, and it's that time of year where you got to figure out what to do in the fall. And it's just like a sport, isn't it? I mean, you're doing it 365 days of the year.
Yeah, well, whatever you need to do to pad that resume for college applications.
Is that how you did it? There we go. There would be none of the padding of resume here the last week of August towards college. I would never want to hear from that as well. This is the strangest of August weeks. I really can't say enough about it. To that jobs report on Friday, and we'll have that for you. Kayleigh Lyons with us the entire week. That is a good thing. Futures up 20. Stay with us through the day on Bloomberg Television and Bloomberg Radio.
If there was a big strike that affected multiple auto manufacturers and lasted for a long time, my fear is that would have a pretty material impact on the manufacturing economy. So that's where my head is. About wages, as I highlight, as we've just described, I think wages move slower than prices.
Austin Goolsbee of Chicago, somewhat controversial, replacing Charles Evans out at Chicago, and been a great supporter of the program for years. So it's good to see Austin Goolsbee out in Jackson Hole, he of the University of Chicago. Right now, let me try a little bit of a market check here. Futures up 19, the VIX under 16. The surprise lift to the market on Friday, 15.86, coming in from a 17 level. You know, it's sort of midterm here in the very difficult August challenges that we've had. The yield, well, they come back a little bit, 5.06% on the 2-year yield. I mean, I'm still having trouble with those levels. How unusual, 4.20%. Brent, we haven't mentioned today, $84.45. Oil in betweeny as well. Gold, $19.44 the ounce. Dollar still giving us some love here. Strong dollar with DXY over 104 and Euro 108.10 away from the 107 level. A little bit stronger Euro today. Of note here with all the economic data will be the movers of a quiet summer week. I don't buy it for a minute. Kaylee Lyons in for Lisa Abramowitz, moving the stocks this morning. What do you have?
Well, there's a big one in Hawaiian Electric. Remember, this company has been hammered in recent weeks, given the role it was in theoretically could have played in the wildfires we saw in Maui. Concern about potential liability that this company had. So the stock was down 72% from August 8th when that fire happened to the close on Friday. This morning, though, up 37% after the company that owns the utility put out a statement saying its power lines had been de-energized hours before that wildfire that killed at least 115 people. So a little bit of relief maybe in the stock amidst obviously the horror that is still there on the Hawaiian island. Tom.
No jokes here. This is still an ongoing tragedy of immense size. I honestly think the X number of time zones to Honolulu has a lot to do with this, that it's a little off our radar because it's so far out to the west across the Pacific Ocean. But you've got to believe not only the litigation to follow of all this damage and tragedy, but also just the sheer process of rebuilding, which we're not to yet, but you really wonder where that's going to be as well. What else do you have?
Well, in other news, 3M also is a mover that is higher. This is on reports of a settlement of $5.5 billion that Bloomberg is reporting the company has tentatively agreed to resolve more than 30,000 lawsuits, speaking of litigation, Tom, that were claiming it sold the U.S. military defective earplugs for combat. But that $5.5 billion settlement amount is actually smaller than what many had thought. So you're seeing a little relief in the shares this morning, up the better part of 6% in pre-market trading. And then I wanted to point to Alibaba as well, really just any Chinese ADR that you could look at this morning. We talked a lot about how overnight, Tom, we saw a litany of measures coming from China to try and shore up Chinese stocks. Initially, it worked really well, up 5.5% at the open in China. Saw that really fade, though, only closed 1.2% higher. Alibaba this morning up by about 1.7%.
I'm going to link that into renminbi. This is a weaker renminbi, 7.29 yuan. Let me get that up. You can do that on the Bloomberg terminal, folks. USD CNY. The foreign exchange power of a terminal is breathtaking. I take it out to 2 standard deviations. Kaylee, we're not there. 2 standard deviations on yuan right now is 7.34, so we're a little bit distant from a weak renminbi, weak yuan, I should say, move there as well. Continue to watch us. Stephen Engel with so much of our good coverage with Yvonne Mann over in Hong Kong. Look for that in the evening hours. Right now in the evening hours in Detroit, the UAW with strike approval needs to figure out what to do. Following this is somebody encyclopedic on Detroit, on Dearborn. David Welch joins us, Bloomberg Detroit Bureau Chief. David, how close are we to a strike?
Look, I think we'll have one with at least one of the companies. The strike vote itself, this always happens. And the workers always vote for it because that's what gives negotiators the leverage to negotiate a deal. And it's sort of a legal requirement that they do it. So, I don't want us to get carried away that this vote, even though it was a landslide, it always is, means they're going to walk out in the next couple of weeks. But we do have a midnight September 14th deadline. We've got a union president who has big demands. And we have companies that they know they're going to have to pay these guys something because they've gotten very, very cheap contracts over the last decade and a half, really. But how rich is the question?
David, an average SUV, car, truck, takes 17 to 18 hours to build. So these guys are going to build less than 2 cars a week?
Not sure I understand the math. They build multiple cars per hour.
Well, but we're going to get down to a 32-hour work week. I mean, come on. I mean, David, I know you're clocking in a 32-hour work week, but most of America isn't here. How is the United Auto Workers going to get a 32-hour work week?
That's one of those. So look, the whole thing, how this is unfolded, is interesting. And weeks ago, the UAW president, Shawn Fain, and the vice presidents who actually lead negotiating with each of the 3 car companies laid out their goals for bargaining. And the 32-hour work week and the bringing back defined benefit pensions wasn't there. What Fain did is he took a list of demands from the membership, who emailed them to him or whatever, and that was included in there. Something like a 32-hour work week to me is kind of like the guy who runs for student council and promises the high school students they're going to have draft beer in the cafeteria.
Aspirational.
I don't think that's realistic. I think he's fairly serious about pensions. I don't think he's going to get that. But stuff like cost of living allowances, big pay raises, better pay for battery workers. I think all those things are realistic and on the table, and I think the car companies know they're going to have to do something.
And Kaylee, it's a really important. One of their demands was also to get the Detroit Tigers over 500 baseball. Once again, they failed to do that this year.
Aspirations abound. But David, this isn't just about the actual wage number, that whatever raise comes out of this or whatever agreement related to pensions or the hourly work week, et cetera. It also more fundamentally is about the EV transition and what's going to happen to workers in that. Can you walk us through that, David?
Yeah, the first part of it is what you pay battery workers, because General Motors has a joint venture in Ohio. It's the only unionized battery plant in the country right now, and the starting wage is $15.50. They just cut with an interim deal to raise that by $3 or $4. So now most of the workers are making right around $20 or a little more if they've been there for the whole year the plant's been open. But that's still well below the $32 an hour that assembly workers make, and the union wants to get that pay raise up. And then, these plants, these battery plants and electric motor plants that the companies don't own, are going to replace workers who make engines and transmissions and exhaust systems.
David,
so it'll be about organizing those people too.
David, help me here. Have we stopped buying EVs? Like everybody that wants an EV has gone out and bought an EV, and that's it?
No, but growth has definitely slowed down. I think we are reaching a point where the early adopters and really EVs have taken over the luxury market in a number of areas. So, look, there are only so many, people out there who can buy a $60,000, $80,000, $100,000 EV. That's why Tesla's been dropping prices, and that's why you've seen others drop prices too. So there's growth out there, but even with the price decreases from some companies, including Tesla, they're still not cheap vehicles.
David, thank you so much. Terrific brief. Great knowledge. David Welch, he's our Detroit bureau chief, which barely describes his contribution to what's going with automaking, particularly down the interstate of the Midwest of this nation. Kaylee, your observation on a Monday as we stagger through a really important week.
Well, I'm watching, Tom, to see if we can actually hold the gains we are seeing in the future session today, because we have yet to see 2 back-to-back gains for the S&P 500 in the month of August. We only have a few trading sessions left in this month. If we don't get the back-to-back gains, that'll be the first month we've been lacking that since 2002. It just goes to show you how an equity market that ran really far up until this month is starting to face more challenges.
Yeah, I have trouble with this. I mean, we go back to Sam Stovall at the beginning of the show and this idea of, with equities, and it's different for each asset class, but 10% correction, 18%, maybe 20% bear market. And then the idea that every once in a while things get ugly down, you go say 35%. We've barely nudged towards a sense of correction, and yet everybody in, the Bart Simpson school of strategy is having a cow. I mean, that's where we are.
Are you saying I'm having a cow, Tom?
No,
I was just pointing out my stat of the day.
Well, it's very good. It's a very good stat of the day. Can you come back tomorrow?
I'd like to. Okay. Will you have me?
Well, we'll have you if we can't figure out where Bramo is. She was with us at Jackson Hole.
She rode off on a horse somewhere.
No, she went off on a Gulfstream. I don't know what that was about. We will be here through the week. Jobs Day on Friday. This is Bloomberg Surveillance. Good morning.